All right, guys. So today we have CPI inflation data. It is the biggest day of the month outside of maybe the rate hike decision. CPI days are usually pretty fun to cover. Today, the expectations for CPI are 3.6%. All this data drops at 8:30. We will get a timer going here as well. But yeah, CPI inflation data today, guys. It's been a really slow few weeks because of no economic data. I'm really excited to get some economy stuff rolling today. Um, Again, it's been a pretty slow time because we just haven't really had that much data come out. The last few weeks. A couple weeks ago they did GDP, PCE data, non-farm payrolls, and non-farm employment change data all the same week, and so that made the rest of the weeks this month kind of slow. I'm not sure why they designed it that way. Hopefully they don't do it like that again because it'll give us stuff to cover every day. Yesterday was actually a pretty nice day for some stocks. Disney specifically did really well. Apple did pretty poorly after their event, which a lot of people said was just like a big marketing advertisement. If we look at Apple here, Apple had their Wanderlust event midday yesterday, and the market did not like it at all. Tesla still sitting, right around 260s, not at the 270 levels it was at yesterday, but still pretty high. And yeah, I'm in Ford actually. Ford's green. The one that did me the best yesterday was Disney, to be honest. Disney got all the way back up to 84. So my average price on Disney, if I show you guys this, is about $80. So again, we only have 55 shares left, and we had hundreds, and you can see we're up about 150 on this last 55 shares. And we took profit yesterday at the opening bell on Disney. But again, you can see my average is under 81. It's 80.9. We're at almost 84. Again, Disney consistently turns out to be one of the best performing stocks in my portfolio. I'm just really calculated when I buy those dips. They seem to work really well. And yeah, it's freaking inflation day to day, guys. Hopefully y'all are ready. Because of inflation day, I'm gonna go back to some of my old school music. All right. Really about 2 hours and 13 minutes, 12 minutes, 11 and a half minutes, just because a little late. So I think my math is right. Yeah, there we go. So 2 hours, 11 minutes. And yeah, SPY down slightly, Q down slightly. And today's a pretty big day for data here. It's inflation data, CPI data. I'll put this up on screen as well. We'll put this up on screen so you guys can kind of see. We're going to have a lot of people asking me what time it's released today. Hey, what's up, Jonathan, Breeze, P, Joseph, JP, Hannah, B, V, Peggy. Good morning. Hope you guys are doing well. Today, we're going to do a poll like we always do. And we're also going to do a Twitter poll. Also, do me a favor. Bump that like button. Let's get that like count up real quick if we can. All right. CPI inflation data coming higher or lower than expected. We're going to do higher, lower, and as expected as our three options. Put on that poll. Apple, guys, still looking really weak, man. Kind of weighing the market down. Some workout yesterday. What do you mean? AI is just another pamphlet. Hey, thanks. What's up, twin? Yeah, we got the ECB rate hike decision sometime soon. I'm not sure when this is. I think it's tomorrow, actually. So yeah, today we got 30-year mortgage rates. Expectations for that are 7.2%. Expectations for that are 7.2%. We also have Hong Kong PPI data expected at minus 0.2%. England GDP data dropped this morning and it came in at minus 0.5% versus minus 0.2% expected. CPI data is out. Australia unemployment data drops this morning or this afternoon. But yeah, so basically crude oil inventories and CPI data. Core CPI expected at 0.2% year over year. Core CPI is actually expected to decrease 0.4%. And so, if you're watching the core data, which is excluding food and energy, if you're watching the core data, it's expected to decrease 0.4% from 4.7% last time to 4.3% this time. Month over month is expected to stay the same at 0.2%. Regular CPI expected to increase 0.4% month to month from 0.2% last time to 0.6% this time. And year over year CPI data is expected at 3.6% from 3.2% last time. So another 0.4% uptick in inflationary data for the base one CPI core. So excluding food and energy, though, it's actually expected to get better. So depends on which way you look at it, I guess. Just drinking my coffee. If it's low, then no rate hike, and if it's high, then rate hike on the way. How do you see this? I think there's probably going to be a rate hike, or there's probably going to be a pause in rate hikes no matter what this data is, unless the data just comes in really, really bad. I think there's still going to be a pause no matter what. I think regardless of what happens, we're going to get a pause in rate hikes this next cycle. Even with the 0.4% uptick, everybody's still overwhelmingly expecting a pause at 93% on the CME Group Watch tool. So, I mean, I think it's just pretty likely that we're going to pause regardless of what we do here. So regardless of whether we come in high, low, whatever it is, I think we're going to pause. And I think that's the most likely thing to expect. There's always a chance that we don't and that it shocks the system. Again, those are generally pretty rare. Not related to stocks, but what made you get into streaming? I don't know. When I started, not that many people were doing it. And so it's just a way to interact with my viewers and my subscribers at the time. Eventually, I realized I like streaming more than editing. Yeah, I mean, energy stocks have been flying up over the last couple of days. Exxon, doing really well. Here's Exxon on the right. See, I'm in Exxon too. We're up about 114 on this one. Small trade, but I mean, we've been sitting in this, a lot of divvies paid out over the last few days, so we just kind of took the divvies in. Where's Roblox? I'm in a Roblox call option that I think expires September. It expires October 23rd, so we still got like a month and a half. But it's a $30 call option. So I wish Roblox would move up more. I mean, all it's got to do is hit $30, which is not really that far away. It's got a month and a half to do it. Roblox just had that big drop from earnings. What will happen in the market if core CPI is better than expected, but food and energy is worse? So We don't know. I mean, nobody knows what the market's going to do there. Nobody knows if the market's going to react positively or not to this. It's just all really speculative and very difficult to predict, I would say. Again, vote on the poll. 45% think CPI data comes in higher, 29% think lower, 25% think as expected. 30 minutes ago, Reuters said to the EU to assess punitive tariffs. What do you mean anti-dumping laws? Yeah, I don't think we're going to do a rate hike regardless, unless it's really high. Life and losses. Life and losses says if it's low, then no rate hike. He says if it's low, then no rate hike. If it's high, then rate hike on the way. How do you see this? Again, I don't think we're going to do a rate hike regardless, unless it's like really freaking high. If they come in really high today for a rate hike or for inflation, like if a CPI comes in at like 4 point something, maybe. But I still think it's pretty unlikely that I think it's pretty unlikely that we are going to raise rates this next cycle next week on Wednesday. It's next Wednesday, so it's exactly a week from now. Yeah. I think no matter what happens, the market's going to be volatile. I think it's an important day today. Tomorrow, it's not just today, though. So, like, understand, it's not just today. It's also tomorrow. So today we have CPI. Tomorrow we have PPI, retail sales, jobless claims numbers, right? Friday is quad witching day. Tomorrow we also have the ECB rate hike decision. So tomorrow we have the ECB decision, retail sales, jobless claims, and PPI data tomorrow, and the ECB rate hike decision. So we just got a lot of stuff going on, and then the ECB press conference that accompanies it. And then Friday is quad witching day, and then next week we got and then Friday we got the New York State Empire Manufacturing Index too. So like, there's a lot of different stuff that's dropping. And then next week I think Monday or Tuesday we got the JOLTS report. Let me see. I'm checking everything out now. So yeah, that's this week. So this week, basically every day for the rest of the week's pretty busy. Next week, nothing on Monday. Tuesday we get building permits and housing starts. Wednesday we get the rate hike decision. Thursday we get the Philly Fed Index, the Bank of England rate decision, and existing home sales. Friday, manufacturing and services PMI for Friday. Oil is going to be the main part of the CPI prices rising. Yeah, I could probably agree with that. Every day a report plus Powell parties more than often. Yeah, I mean, every day, the last few weeks have actually been pretty quiet. You know, we got some report every day, but it's not like jobless claims is not the most significant report, you know? So like this is though. So this is the biggest economic release aside from the rate hike decision this month. So this is the biggest economic release this month, basically. Not for sure, but it's close, you know? Also, y'all do me a favor, guys. Everybody here, hit the like button. We appreciate it. Bump that like number up. We got 24 likes. I'm trying to break 100 likes before 7. I get my Disney trade still doing pretty nice. Let's see what everything else is doing. AMC still sitting at 750s, 760s. So bounce from 7, but still struggles. Apple, yes, people did not like the event, all the way down to 175 now, 175.30s. Google down a little bit too. Nvidia under 450s, but pretty flat the last couple of days. Nvidia's been very choppy the last few days. So like it dipped in pre-market yesterday, ripped at the opening bell, and then basically stayed flat after a small bounce at the open, still sitting right around where it was at the opening bell yesterday for Nvidia. If we take a look at Nvidia here, yeah, if we look at this, here is the opening bell level. So this is where Nvidia opened yesterday, right around here at like 447s. If you look at where we are now, we're right at 447s. So Nvidia basically flat over the last few days, pushed up a little bit at the opening bell, and then mostly stayed sideways. The Q, the Nasdaq starting to flush down though. Look at the Q breakdown here. It's at 371s, looking weak. 372s, looking weak this morning ahead of this data release. Any other stocks? Yeah, so Nvidia, we got Microsoft down yesterday also. Walmart's still doing okay, doing nice, moving up. MU, AMD. I heard Bitcoin ripped. Yeah, Bitcoin back up to 26.2K. What else? Nvidia, like I said, pretty flat. Anything else? Any other big stocks you guys want to take a look at today? Again, here's the Q at 372s. Who knows what we're gonna do with this? Nvidia is gonna go to 440 before a bounce, maybe. Apple getting lazy, no innovation at all. Yeah, I mean, I think it goes through phases. I think people hang on everything they say every year, but it goes through phases, man. You know, every major conference, they think they're going to debut something crazy, and it's not. They're not going to be. It's nobody's capable of debuting game-changing stuff every event. You know, it's just they don't. You know, nobody's going to be able to produce that much, I guess. Hey, what's up, Pawn? Is the ARM IPO today? Is it really? I've been hearing hype about that for weeks now. Haven't really seen much on it though. Again, y'all do me a favor, bump that like button here, team, if you haven't already. We got 37 likes. My goal is to hit 100 before 7. That's the goal. Yeah, I don't see anything about ARM yet. How's Home Depot and other retail stocks doing? Flat. All right, so a lot of people saying the ARM IPO is today. I hope so. All right, again, 45% of people voting on our polls think it's going to come in higher. 30% think lower. All right. Weird. Why Tesla stocks are pumping? Yeah, Tesla's still not pumping. It's dipping down a little bit now. Again, here's Tesla. There's the Q on the left. Here's Tesla. So Tesla, big open, weak rest of the day. So there's Tesla. It pushed up a lot at the opening bell yesterday, and then it basically started to fade back down. All right, again, Tesla at 268.70s, 268.70s. Disney at 83.70s. All right, so Adam Aaron put out something yesterday. He said AMC's millions of shareholders are going to find the new movie Dumb Money opening September 15th to be utterly fascinating. Sony and Columbia Pictures have set out to showcase the increasing stature and power of retail investors through the lens of the extraordinary trading of GameStop back in 21. All these traders saying they're not leaving. I mean, hey. All right, guys. So, bro, how tall is Taylor Swift, dude? I don't know, man. Are traders still mad at Adam Aaron? Hey, I don't know if they're still mad at him or not. Again, hit the like button, guys. Dude, hit the like button. We're going to try to run these like numbers up. Apple stock will go up, Maiden. Yeah. All right, so the ARM IPO is set for tomorrow. Price range is 47 to 51. Thanks, Pawn. Taylor Swift is my height. So like I'm like 5'10", 5'11", somewhere in between that, really. But like Taylor Swift is 5'11", dude. She seemed tall. Do you think the Cowboys will win the Super Bowl? Maybe. I hope so. I'm rooting for the Cowboys. If my Saints don't win. Hmm. All right, guys. Again, bump that like button up. We only need 40 likes. Yeah, Derek Carr. I mean, hey, he didn't do bad Friday, or he didn't do bad last Sunday. All this inflation will catch up with the retail investors soon enough, maybe. Musk will cross 300 billion in 2 months. I hope so. Yeah, what's up, Beach? Where's Drew Brees? He's been retired. Today or tomorrow? Yeah, a lot of people were saying tomorrow. A lot of people saying tomorrow for the ARM IPO. Tomorrow is going to be a volatile day too. Tomorrow we have PPI. We got PPI. We got PPI retail sales, core retail sales, jobless claims numbers, all dropping tomorrow morning. So. And yeah, look at all the big market stories of the day. All right, so markets are increasing their bets on the ECB policy tightening as the meeting nears tomorrow. Ford gained after a double upgrade from UBS AG. Apple, another day of down movement. China flagged some security problems with the iPhones, and so Apple still looking pretty weak, especially after that conference. Again, the Q's still down, but the liquidity is low for a CPI day. But here's Tesla. Tesla, interesting. We also look at the dollar index. The dollar index is a really important thing to pay attention to and watch, heading into all this stuff too. Yeah, I'm ready, man. Honestly, CPI day to day, bump that like count up. We're trying to break 100 likes. We're going to be trading live today at the opening bell too, but I'm thinking about getting into Forex too, but I guess the only thing available in Forex, the funded accounts. Again, hit that like button, guys. Disney, again, one of my trades that are doing really nicely. Again, Disney has been pumping up, and the whole market has basically been down the last few days. Look at Disney here. Here's my average. We're still up about 150 on the last 55 shares. You can see our average price is about $80.98. So our average price is way down here. So I'm saying people always try to hate on me for Disney. Like every time it has a red day, they're always acting like I'm just down huge amounts or something. But like my average price is right here. Yeah, no. And yeah, feels good, man. Feels good. We'll see if it holds. Hopefully Disney keeps rising. And Disney had a good day again. NASDAQ, slightly red day. If we put up like a 10-hour chart, it's been pretty flat time for NASDAQ too. I mean, it's green over the last, 10 days. So green over the last 10 days. We started 10-day period off at about 367s. We're at 372s, although we haven't really gone much anywhere. Here's the rip up, and then we basically stayed sideways, and then we dipped down, and then we bounced up, and then we bounced back down. And so really we are in the sideways range. We're basically just flat. We're not really doing that much here. Just mostly flat on the day, and that's all right. Again, hit that like button, guys. We got 66 likes. Did your dollar cost into Disney? Yes. I'm done trading Tesla. Just buy and hold. Yeah, I mean, it's going to be a lot easier. What's your prediction? I don't know, man. I think... should I buy Tesla and rebuy later at a lower price? I don't know. Smash the like, hey. Thank you so much. Yeah, I mean, the last couple of days has been mostly flat. We've had okay days, but like a lot of the market's waiting for today. The CPI data is such a big release. A lot of the market's just waiting for this data today, to come out. Are we going to sell off or go up? I'm not sure, to be honest. The expectation for today is 3.6%. So 3.6% is what we're expecting. Yeah, and I think a lot of YouTubers, the reality of it is like a lot of them have been calling for a short, like market crash. Like every video, like every major FOMC meeting, CPI report, they're saying the market's going to crash, and then the market doesn't crash, and it keeps kind of going up. Like if we look at the market, here's the NASDAQ, right? If we look at the market, here's a 6-month chart on the NASDAQ, and a lot of these big traders for this entire period of time, regardless of what they say, have been telling everybody the market's going to imminently crash during a 6-month period. And again, I'm not saying it's not going to, but like, I think when you zoom out and you look at what other big supposed market experts are saying versus the guy who's telling everybody he's not an expert like me. If you look at what, a lot of these experts have said versus what I've said, I've been pretty right about everything. I told you guys the market didn't have to crash. I told you the market would probably push up. I told you guys the biggest edge was on the upside long term. And if you're trading against that, you're trading against the biggest statistical edge the market ever gives you. And in hindsight, we've been right, and a lot of these other big time, experts have not. And that's something that, they're not going to really necessarily want to look at objectively. And I get it. I get it. I'm not really mad. It's all love here. It's all love. Yeah, I mean, right now we're almost certainly not going to raise rates. I think even if we have higher than expected inflation data, we're not going to raise rates. So I think like even if we come in at like 4 point something on the year, I still don't think we're going to raise rates. I still think we're going to skip or pause this next cycle. But again, maybe I'm wrong. Let me know what you guys think. Do you guys think if CPI comes in high, low, let me know what you guys think will happen. I think no matter what, I think CPI data is, I think it's going to have to come in really freaking high. Yeah, I think the market's going to have to come in really high. Yeah, Q's still sitting right around 370s. Again, if we look at a longer term support or resistance, again, here's a 180-day chart. I think we can look at a couple levels on the NASDAQ that makes sense. I mean, the biggest low level is 355. We start breaking under 355 here on the Q. That is going to be a noticeable support break, a noticeable support break. So like, and that'll also like change the trend here. So like, imagine if this starts to go like this. Imagine how many bearish traders are going to come in, because again, this support level here is big, right? So if we break underneath that, that's going to mean the trend looks like this, and that's not really a pretty trend, I would say. And so I think no matter what, I think we want to hold over 355, 350 on the Q. If we do the same thing on the SPY, and we can also put up like the E-mini and all that stuff, but if we do the same thing on the SPY, which is the S&P, I think this level specifically here, let me see if I can zoom out a little bit more. Yeah, so I think this has been more of like a trend. Like you can kind of see the trend on the SPY. I think if we break under 400s on the SPY, that's really bad. So if we break under 400s, again, that's not good at all. Again, hit the like button, guys. We're trying to break 100 likes before 7. We got 9 minutes. We should be able to do that. But yeah, if we break under 400, that's obviously bad. I think if we break under, I would say if we break under this level here at about 420, that's a rough sign. I think if we break under there, that's a rough sign. That's a sign that we might start going like this back down. And it's definitely not what people want. Again, we only need 20 more likes to break that 100 like level. Yeah, I mean, we're not going to beg for money. Good day to you, sir. Nobody pay these guys money. Most of the time, they're not even traders. They're just going from stream to stream begging for money, hoping somebody's dumb enough to give it to them. Do not give them money. All right, so SEC Chair Gary Gensler said crypto is full of fraud, abuse, and misconduct. Yeah, people talking about the poker boom. Hey, guys. Is one rate hike really going to crash the market, though? If it shocks the market, it's not. I don't know about crash, but I'll tell you this: if they do a rate hike, and if they do a rate hike and it's a shock to the system, so like if they do a rate hike and it's unexpected, that's bad, right? So like if everybody's expecting a pause or a skip and then they announce a rate hike, market's going to go down. Most likely. You never know, but like if they announce a rate hike, and then the rest of the market expects a pause or a skip, they're probably going down. So that's the thing just to watch. You know, like I'm watching this guy, Jeremy something, talking about how he makes 2.5% per day. Like, bro, like these guys are so full of crap, dude. Like, and he's older. Like, you can tell this dude's like my age, with 15,000, and you compound that by just 0.5% a day, and withdraw any money. 12 months, you'll have over $1 million. Get the F out of here, bro. Oh my gosh, dude. Like, how are people this dumb, man? Like, dude, do you think you would ever, like, there's so many things wrong with it. And the problem with this is that most people do not know this is wrong. 2.5% a day, dude. Anybody telling you that, slap them. You know, like, so ridiculous, man. 2.5% a day. Again, when you compound that over time, dude. Oh, okay. 2.5%. All right. So you say you make that a day. And this is not even with compounding, right? You make 2.5% a day, 5 days a week. That's 12.5% a week, bro. A week without even including compounding. And with compounding, it's going to be so much more. You do that by 4.3 weeks in a month, you get 53% a month. You do that by 12 months, you get 645% in a year. You add compounding to that, bro, you're going to be up ridiculous amounts, dude. It's just hilarious. It's hilarious, man. Like, what are these dudes talking about? Just absolutely ridiculous. Yeah, just ignore everything this person says. Like, they either knowingly lie to you all, or they're just too oblivious to understand why it doesn't work, right? Either way, it's bad, and you want to stay away from somebody like this. And, like, he even knows, you can see it in his voice, like, this guy saying this doesn't believe this. He knows he's full of crap. Yet, somehow, you know, what's to even say? I'm up like 22% this month. Congrats, bro. Congrats. Again, if you don't know why this is wrong, somewhere you've been misled, brother. Somewhere you've been misled. Listen, I'm gonna say this again, and I'm not judging anybody. All right, I'm not judging anybody. Okay, but if you think you can make 22% every month, you know, somewhere you've been misled. You know, and again, if you could make that, I promise you, send your stats to Goldman Sachs, bro. They'll hire you in a heartbeat, dude. You know, again, what happens in trading is very simple. You know, again, hit that like button, guys. Bump that like button. Did we break 100 likes yet? Oh, we did. Thank you guys so much. I appreciate it. Thank you guys so much. And I know I'm kind of raining on people's parade, but people can either choose to live in delusion, or they can hear the truth, even if it's not fun to hear. Right? And this is the truth, right? Anybody can take a big swing and gamble and make a big percentage in their account. Bro, I got a large account. I could take my 200,000 in buying power and swing for the fences on any given day and take obscene amounts of risk and make 10, 15%. Most of the time, I make 10 or 15%, right? Anybody can do that, right? Number one, it doesn't mean you can do it every week is the difference. Like, a lot of people make it 1 week, and then they're desperate for validation. So they start telling people, hey, guys, like, I might make 10K 1 week. Then I'm telling everybody, yeah, bro, I make 10K a week trading. And it's like, no, you don't. You made 10K 1 week taking a huge risk, you know? And again, the reality of that is if you keep pushing, like if you keep swinging that large, eventually you're going to lose your entire account, right? Again, the martingale roulette strategy is what I always bring up because it's absolutely true, which is that, like, the martingale roulette strategy, you double your bet until you win, right? So you bet $10. It's a roulette strategy. You bet $10, you lose. You bet $20, you lose. You bet $40, you lose. You'll have to lose 6+ times in a row to actually lose. And for most people, they'll think that's, you know, impossible. And in trading, it's the same way. You keep adding to losses, adding to losses, adding to losses, right? And most of the time that's going to work. And a lot of young traders don't know any better, and so they think they've got some wildly profitable system that just nobody else has figured out, right? When really they're just adding to losses. They're just doubling down, doubling down, doubling down. And I always say the same thing, which is eventually the check's going to come, and it's just not going to work. Eventually you're going to lose everything doing that. It'll work most of the time, but eventually you're going to lose everything. And so make sure your system isn't that, because that's not a real system, guys. Understand that. In July, there was a calculation mistake that affected the rate hike. Will this happen again? I'm not sure. This is for new traders. Yeah, I mean, cloud trader, bro. Like I said, dude, buy your day trading course, guru stuff. Listen, do your thing, man. Again, I'm not trying to talk you out of it, bro. Do your thing, man. Again, I've been trading for 7 years. Longer than most of your favorite gurus. Again, do whatever you want to do, brother. Options, you can do whatever you want in options too. But again, options, it really is a thing where people keep adding to losses. And it's like they get so mad because I'm attacking their dream, right? I'm attacking their dream. This is their dream. Truth hurts. But like, again, if anybody had a system in which you could make 20+% every month, number one, I would show you what would happen, right? If you genuinely had a system that could do that, anybody that could actually do that would show their broker statements, especially if they were selling a course, right? Like, you got a bunch of people that are selling courses that are claiming to make all this money. Again, if they really were, what they would do is they would show you their broker statement freaking every month, right? Not just 1 month. They would show it to you every freaking month, because think about if you're selling a course, what better credibility building thing than that is showing your broker statements every month, right? The reason you only see them maybe 1 month out of 6, 1 month out of 12 is because that's probably the only month they actually did that, and the rest of the months they were losing. Yeah, trust me, bro. What do you think about YouTubers who say that predicting stocks is just recognizing geometrical patterns? Well, yeah, I mean, we could dumb it down to say that. I mean, that makes sense. That's basically what it is. It's not, trading is about understanding psychology and mostly having discipline is what trading is about. Yeah, what's gold doing today? Again, CPI day today, guys. CPI day today. We still got about an hour and a half, but let's get ready. I'm ready. It's been a while since we did it. The economic data has been light. Yeah. Warren Buffett's best year was 27%. Yeah. Yeah, I mean, again, like, it's so hard to explain to people because people get so excited once they do it. Like, again, they feel like I'm crapping on their dream, and I kind of am. But again, you have to understand what's a reasonable expectation for trading. And you got a lot of people that are just slanging courses, telling everybody that they can make 40% a month every month. And that, like, bro, again, if you could make 40% a month, you would not be on my YouTube channel. You would, like, again, anybody can make 40%. Let me clarify this. Anybody can make 40%, but doing so consistently month in and month out without losing your account eventually is not possible. Not really possible. I mean, somebody might be able to do it for a couple months in a row, but again, eventually the check's going to come. If you want to see what actually works in trading, watch what big money does, right? Watch what big money does. The guys out here selling, I'll hold my tongue, but good luck. I wish you guys, I hope you make some money. Yeah, so Webull not showing. It's the ARM IPO today. Remember, we got the ARM IPO. Bro, I had some weird dreams, dude. Again, CPI inflation data, 8:30 today. Let's do this, guys. I'm ready. Hey, if it works, it works. Yeah, I mean, listen, do your thing. Again, I'm really not trying to be a hater. I'm not. Um, I mean, I know it's complete and utter nonsense. Anybody that's claiming to make 20+% every single month, I know it's complete nonsense. Somebody saying they make 2.5% every day in the market, but like, again, I'm really not trying to be a hater or start drama or anything like that. Like, I mean, I might make a TikTok video reacting to it, but you know, it's all love here. Hey, thank you, Cloud. I appreciate you, my guy. Thank you so much, dude. I'm hearing all this stuff about Forex. What is Forex? Foreign exchange is what it stands for. It's the abbreviation for foreign exchange. Yeah, again, I guess the big thing to understand about scalability in trading, maybe not scalability in trading, but listen, if anybody had a system here, right? Just and I want you guys to understand this, right? So you can understand what it really is, and so it'll allow you to test other people's nonsense more. Okay. If anybody had a system, like a consistent, verifiable system, trading system, in which they could make 100% a year, and they've done that year in and year out for at least 3 years, Goldman Sachs would hire them and pay them hundreds of millions of dollars. You know, like without, like, obviously would do that, you know, and it would probably be worth it for them too. You know, the reason you don't see a bunch of these YouTubers out here doing deals with Goldman Sachs and working in the trading floor of Goldman Sachs is because they're all full of crap, you know, for lack of a better word. So just be smart. Think about it. Ugh. If you start with 10K and make 20% a month for 3 years, you'll have 6 mil. Yeah. So Han. Yeah, sorry. What sparked this convo is the 2.5% guy a day. Dude, I gotta save this. And again, man, I've known traders, dude. I've known traders, bro. Like, trust me. I've known traders, man, that see me trade and they're like, oh, this dude's making, you know, 100 bucks or 200 bucks. This dude's trading small, and like they're trading options or they're trading whatever, and they're trying to kind of like poke fun at me. And again, it's the same thing where it's like anybody can choose to take obscene amounts of risks, obscene amounts of risk, and make a larger percentage than, you know, than they should be making on any particular day. Anybody could do that. I could squeeze and basically here's the way to put it. I could just start clicking buttons on the SPY, right? I could wait for a big pullback on the SPY and just keep buying it up with the amount of buying power I have. Just buy every little pullback, buy. And eventually, I'm probably going to make money in that trade. I would give myself at least an 80% chance of making money in that trade, right? So I'm going to make money a large majority of the time doing that if I just keep clicking buy on the SPY, right? And so most of the time, the accuracy rate in that system is going to be high, you know? And so for a lot of new traders who don't know any better, right? They think they found the best system in the world. They think that they're like, dude, this system's got 80% accuracy. I'm growing my account. I'm making all this money. You know, that's great. Again, eventually the problem with that system is that eventually the SPY is not going to bounce. One of those times, the SPY is just going to keep going down. It's not going to bounce at all. It's just going to keep on dropping. And when that happens, my whole account's gone. And so make sure you're not doing that. And I know a lot of new traders do that. Just make sure you're not doing that, because again, now you can do variations of that. Like what I actually do with my funded accounts. Like I've been funded on multiple Top Step accounts over the last couple months. What I actually do with those is a variation of that. To be honest, it is a variation of that. It's a little different, but it's a variation of that, in which I build up a cushion first, right? So I build up a cushion. I try to make $200-$400, just regular trading, not doing anything crazy or risky. I try to build up that cushion. Once I have a cushion of $300, $400, $500, then I will then I'll wait for what I would consider a favorable pullback in a trend. So like if a stock is going like this, I'm going to wait and do that right here, like on a dip, right? I'm going to start adding to it on that dip, and I'm going to add in some size, looking for the bounce back up, right? And that way, I'll keep adding to it too, because I have the cushion on the day to do so. Then if for whatever reason we don't get this, and we instead just get this, then I'm break even on the day. Then I'm flat. I don't have to worry. I'm not having a huge drawdown in my account. And so there's variations of what I'm saying, but just don't fall yourself into that trap, because it's a risky trap to get into, man. And it's something that, again, can be misleading. A lot of new traders, they think they've got some crazy profitable system, when really they're just kind of adding to losses over and over again until it goes in their favor. And eventually it's not. So, CPI goes up as inflation went up 0.2%, and core CPI should rise up again as oil. Yeah, well, oil's mostly been pushing up over the last couple of weeks. This CPI report is from August, and so, again, so oil has been rising over the last few weeks. This CPI report's from August. Core CPI is expected to decrease 0.4%. So I think last time core CPI, let's take a look. So last time core CPI showed up at mortgage rates did just drop. So mortgage rates came out. They came in at higher than expected, higher than last time for 30-year mortgage rates at 7.27%. 7.27% is what the 30-year mortgage rate came in at. So again, mortgage rates went up again, guys. We'll put this up on screen, but yeah, mortgage rates went up. 30-year mortgage rates went up to 7.27%, 7.27%. So they did rise. We'll put that up in the chat. And again, so that's happening. But yeah, CPI is expected to decrease. Core CPI is expected to go down. Last time, year over year, core CPI came in at 4.7%. This time they're expecting 4.3%. On the year for core CPI, which again, core CPI excludes food and energy prices. So it's food and energy excluded CPI. Month over month core is expected to stay the same at 0.2%. Regular CPI is the one that's going up. So you got core CPI, which again excludes food and energy. And then you have just regular CPI, the consumer price index. Regular CPI on the month is expected to go up 0.4% from 0.2% to 0.6%. Regular CPI on the year is expected to go up 0.4% from 3.2% to 3.6%. We also have like the Bank of England Deputy Governor Woods speaking today. Crude oil inventories at 10:30, which might be relevant with all the oil stuff going down. But yeah, that's essentially what we got going on today. And then tomorrow we got a bunch of stuff too. Like tomorrow we have PPI, core retail sales, jobless claims numbers, the ECB rate hike decision. Yeah. And so a lot of stuff dropping tomorrow too. Tomorrow's actually a really busy day as well. Yeah, I'm not sure what you're talking about, Cut, but all good. In the short time I've watched you trade, it seems like you must have started young. I started trading right around when The Big Short came out. like the movie The Big Short. I went and saw the movie The Big Short in theaters with Carol, like right when it first came out. And prior to that, I was always kind of like a poker player and like a strategy player. Like I like chess and checkers. Um, my dad loved chess and checkers. My mom's a big card player too, and so I saw the movie The Big Short like 7 years ago. After I saw it, I recognized how much money was in the market and wanted to learn. But again, when I got home, I started, Tim Sykes, you know, you can be financial freedom trading penny stocks, you guys. And yeah, ended up losing a bunch of money in the beginning and having to kind of do a bunch of stuff. So yeah, Big Short's the best trading movie by far, in my opinion, like without question. Yeah, well, today's CPI data. That's like me buying meme coins and then they get rug pulled. Yeah, man. Yeah, Carol and I watched The Big Short not too long ago, and honestly, it was like I hadn't seen The Big Short in a long time. So like I hadn't seen The Big Short in years, and I finally watched it with Carol again after a few years, a couple weeks ago, and it was just really good. I understood a lot more stuff about it. Like I remember when I first saw it, there was a lot of stuff I didn't understand. When I watched it this time, I truly understood most of it, and that's always nice. It means I'm learning. All right, guys. So again, CPI comes in about an hour. Do me a favor, bump that like button. All right, guys. So we got a poll on Twitter. So if you haven't already, vote on our Twitter poll right here. Again, if you want to heart our Twitter page, give us a heart button. There's our Twitter link. You can vote on that poll right there as well. I talked my roommate into trading. He loaded up on his Robinhood. That's cool. Since the stock prices have fallen so much, do you think that the report is expected the prices will go up? I'm not sure. Again, I think it's very difficult to predict what this data is going to cause in terms of reactions to the market. Nobody really knows what the data is going to do, what the market's going to react to. Everybody tries to pretend they know ahead of it. I don't understand why. I always tell people I have no idea. Although I think I've gotten my predictions pretty accurate the last couple times. I'm going to go with let me look at the report. So we're expecting 3.6%. I'm going to go with CPI coming in. I'm going to go with core CPI going down to 4.2% on the year. Regular CPI showing up at 0.5%. So slightly better than expected. Maybe not, but 0.5% for regular CPI on the month. 4.2% for core CPI on the year. And the rest as expected is what I'm going to go with. That's my bet. Again, I might be wildly wrong. I have no idea what I'm talking about. No. Yelton, no. Yeah, I mean, even if you make 1% a week, that's still doing really good, really good. Again, not even including compounding, because compounding just there's a lot of calculations I have to put in there for compounding. Compounding, if you don't know what I mean by that, would be like, okay, let me think of the easiest way to put it. Compounding would be like, okay, if I make 5% in a week, right? And if I make 5% in a week, right? The next week, instead of taking five, and say you have $100, right? You make 5% in a week. So at the end of that week, and really it would be a daily thing, but I'll just do it on a weekly perspective to make it easier to understand. So at the end of that week, say I make 5%, right? Now I have 105% instead of 100%, right? And so now I'm taking 5% out of 105% instead of 100%. Does that make sense? So like, say I have $100 at the end of the week, I make 5%, I bring it up to 105, right? Instead of taking 5% of that, the next week you're taking 5% of 105 after that. So then you have 110. And instead of taking 5% of 105 after that, you take 5% of 110 or whatever that is, and you keep increasing that over time. And that compounds it very fast to where you're going to make so much more than that through compounding that, yeah, it's just not really feasible to make, make 2-3% a day. It's just not really. It's ridiculous, to be honest. But people will say whatever they can. My guess for CPI is the opposite of what everyone says. Yeah, maybe. Yeah, so we got some votes here. Hey, shout out to all the followers. Roberto. Anybody else that followed me, thank you so much. Wilco says higher. Still got about an hour and 10 minutes here before this data comes out. An hour and 10 minutes before CPI data, guys. Be ready. Looking at our YouTube polls here. 52% think higher, 53% think higher, 25% think lower, 23% think as expected. So yeah, hey, do me a favor, bump those like numbers up. I'm trying to hit 200 likes. If we can't, do it now. Hit the subscribe button, hit the notification bell. Yeah, I mean, I don't think I don't think it matters. Technicals matter less with fundamental economic releases like this, right? So again, the market could be suiting up for the best technical pattern in the world, but like if the fundamental data comes in polarized, for lack of a better word, then the technical pattern is meaningless. What I mean by that is like we get a lot of people here that argue technicals purely. And technicals are great. They're fun. There's obviously some edge with technicals. And I use technicals very regularly. But again, if an economic report comes out, again, we can have the best triangle pattern in the world right now, at 8:30 when CPI comes out, right? We could have the best triangle pattern ever. If CPI comes in really polarized in one direction, that pattern is canceled out and market's going to do whatever the CPI data shows, depending on if it comes in high or low. And so technicals are important, but during economic releases, they matter less. I guess is what I'm trying to say. Yeah. Yeah, I mean, I could do the compound thing in like a for loop, in programming. So like for every 7 days, increase I by whatever you want to do it, to get the formula for it. But Point is, compounding makes it even more profound in terms of gains. Yeah, technicals are fun. You know, you just don't want to look at only technicals and ignore economic data, because then you're kind of missing out on another big part of what's moving the market. Does a higher CPI weaken or strengthen the currency? Strengthen the US dollar beta. So again, the dollar index is usually going to have an inverse correlation with markets. So again, you can kind of see the SPY or the S&P. The SPY is the S&P. So the SPY is down slightly on the day. The dollar is up slightly. And so again, they're going to be an inverse correlation generally with markets. So if the S&P goes down, the dollar index is going to go up generally. It's not always, generally. And so with CPI data, if CPI data comes in really high, then the dollar's probably going to rise and the market itself is probably going to drop. But again, it's never a for sure thing. But that's generally probably what would happen if right now they're expecting 3.6% on the year. If that comes in at 4.1%, like noticeably higher than expected, the stock market is the S&P 500, the Nasdaq, the Dow, they're almost all going to be dropping most likely, and the dollar index is going to be going up because inflation means more spending, and more spending is better for the dollar. But there's a lot of other nuance to it, like if your cash is gaining value, you're less likely to stick that cash into other investments like the S&P 500 because your cash is gaining value. If your cash is losing value, you're more likely to take that cash and buy other investments with it because your cash is losing value. So you can either sit on your cash losing money or you can stick it into the S&P 500. And so because of that, that's another reason for the inverse correlation between markets and the dollar. But again, it's never like for sure. It does vary. Sometimes you'll see the dollar index and the S&P 500 both moving up. Sometimes you'll see them both moving down. Sometimes you'll see them both sideways. It does vary. Yeah, I mean, we could look at the consumer price index site and see some stuff. Some basic stats. Wait. You can see the formula for this. All right, so here's the CPI formula. So yeah, check out the formula here. By the U.S. Bureau of Labor Statistics. All right, guys, we still got an hour. 1 hour. And you can see the last report we had was in July. So again, the last report we had was in July. Increased 0.2%. You can see energy prices are actually been going down, which is why you see core expected to decrease relative to regular, where food has been going up, but energy has been going down so much that it still influences core on the downside. You can read a little bit more detail into it. But again, the basic number you want to look at. All right, so here is major categories. Food up 4.9%. Food at home, food and away. So food away from home. So groceries on the left, eating out on the right. So basically it's showing you the price of eating out has increased. We can see energy, food, where energy commodities has been the biggest decrease. So energy commodities is down 20.3% for July. Energy services is down 1.1%. And let's take a look at excluding food and energy. So these are commodities less food and energy. They're up 0.8%. Medical care services down 1.5% in July. Transportation services has been one of the biggest upticks. Shelter up 7.7%. So interesting. And again, the SPY back over the volume weighted average price, still pretty flat here. A lot of the time ahead of these economic reports, the market's pretty sideways and neutral. So a lot of the time ahead of these big echo reports, the market's really choppy and apprehensive. It doesn't really know what it wants to do. Dollar will drop today, maybe. Well, it's not going down, but it's decreasing. It's slowing is the better word for it. Why would higher inflation make the dollar stronger? It's really kind of nuanced to go into. Again, mostly because inflation is just spending. Why is tech down despite sideways action? I mean, tech's not really down. If we look at Tesla, wow. Tesla rising fast, up there to 270s, almost 271s. Wow. Big increase. But yeah, if we look at tech, number one, a lot of this is just kind of reeling back a little bit. Stuff's not going to go up forever. So like if we look at a 180-day chart, here's Tesla on a 180 chart. Again, people acting like these are the end of the world. You know, the markets are sensationalized so heavily. You know, if we look at the Q, which is kind of a little bit more tech heavy ETF, right? The markets have been flying up this year. Here's a 180-day chart. You know, you can kind of see these gains that the market has made. And a lot of people have been calling for like a big crash. And again, a lot of people call for a crash here. And then when we finally got this, they acted like they were correct, even though we're way higher than when they called it. But again, you got to understand, if you just look at the broader trend here, you kind of see it, where the broader trend is definitely something like this. You know, that's not the prettiest drawing, of course, pretty ugly, but still, point is, like, we're obviously in an upward trend, and we have been. So yeah, obviously in an upward trend. We've been in this upward trend for a while. We're probably going to continue in this upward trend, but nobody really knows for sure. We could also look, another big reason for a lot of the volatility is Nvidia. You know, if we look at Nvidia's in this trend still. Again, I think 440 is a big spot, but there's a little bit better trend that you can see that we drew on Nvidia. So 180-day chart. Nvidia's mostly been in this trend, but Nvidia's been weighing on the market. And so Nvidia was up so much at this 520 level. You know, it was so high up here at 520s that it's not a shock that it came back down a little bit. I think a lot of people expected it to. And so the real question on what the market does is, what does Nvidia and tech do? What does AI do? What does Apple do? Apple's been slumping for the last couple of days, right? And so another one of the reasons we're getting drops is Apple has been weak the last few days. You know, but again, Apple, even when you zoom out and you look at it on a longer term perspective, it's still a very obvious upward chart. But yeah, starting way back here in August and July, in August, we've been on some slumps, especially in the last few days. Apple has had a rough time, especially after their conference yesterday was underwhelming. But again, you can kind of see these big drops in Apple here over the last few days, including yesterday when they had their Wanderlust conference. Apple tried to go green on the day. It's down so much. It's not I hope it goes green. But yeah, dollar index dipping down a little bit. AMC still another one to watch too. Please stop spamming. It's me. Please stop spamming. I have no idea what that's going to do as well. No idea. Again, the US CPI data. Y'all ready? Are we going down or up? Nobody knows, man. Okay, you're still spamming. Good day to you, sir. Yeah, Tesla. Honestly, Tesla is up to 270s right now, right? Yeah, Tesla all the way up to 271s in pre-market. So Tesla has been one of the biggest gains in pre-market right now relative to other stuff. Apple's starting to creep back up as well. Finally going green. You can see the previous closing price here is the red to green level on Apple. So Apple's back above that spot, which is nice. Oracle, yeah, Oracle had earnings. They dipped a lot. I thought about buying the dip, but with so much tech weakness, and again, if Oracle wasn't up so much on the year, I might consider buying it a little bit more. Again, here's Oracle. Look at how much Oracle's up on the year prior to this. And so if Oracle wasn't up so much on the year prior to this, I might buy it on this pullback. I still might buy it on this pullback. But you know what? I think I'm going to buy a little bit here. I'm going to buy a small piece. A small piece. We're in Disney too. Disney, one of my best trades yesterday. You see the range. This thing's had a huge freaking range though, especially after all this stuff. Actually, I don't know, man. Oracle's, it's gone from $60 all the way to 110, and I know AI has caused a lot of this. If I buy some, it's going to be like 10 shares, dude. Yeah, so I'll buy a little bit, but it's not going to be as much as I wanted. All right, so we just bought a little bit. Small piece. We'll have some fun with that. But yeah, I get Tesla creeping up, Apple going green, Google at 135.70s. Tesla. Again, AMD, another AI stock going crazy. NVIDIA. I think 450 is a big level for NVIDIA. And I think when we zoom out here and we look at a longer term chart, again, there is an argument that we're in this trend right now. 10 shares is more than just a little bit. Yeah, it's not 10 contracts, bro. It's just 10 shares. 10 shares is not a small position for this, considering the range. You know, like yesterday, Oracle moved from 114s to 107. So it had a $7 a share range just during market hours yesterday. If you include pre-market and after hours of the day before, it was at 130s. It moved down to 107. So it had a 107. So it had a $23 range. You know, so $10 or 10 shares is not small. We're about to see the biggest money grab. Hey, maybe. We'll see. NVIDIA will creep back beyond 500 over time, I think. It might take some time, though. Tesla overextended in pre-market. Don't look good for the open. Yeah, but I think it depends on how you look at it. I think a lot of the time, you know, when we have big dips, the market tends to bounce a little bit. Like just in terms of extension, you know, a lot of the time the market does this and then bounces back up. That's something that you'll see a lot. Still got about an hour before CPI data comes out. But, hey, nice, Ricky. Yeah, I'm still in Disney. Again, you can kind of see my Disney trade here. I am at 80.98, so I'm under $81, up about 150. So my average price is way down here. So yeah, my average in Disney is here. So I took a lot of profit on it yesterday. I had a couple hundred shares, so we're doing nice. And we'll see if it keeps it up. Dude, I love your streams during these economic data drops. Always look forward to them. Hey, thanks. Yeah, again, mortgage rates went up again, higher than last time. Last time they came in at 7.21%. This time they came in at 7.27, right around 7.3%. So mortgage rates still rising. Yeah, so the NASDAQ, who was talking? In your opinion, what's better to trade, the E-mini or the NASDAQ? Are they about the same? Well, they move very similar to each other. Like if we put up the Q and the SPY is basically what this is, right? So to understand what this really is, a lot of people get wrapped up on symbols to really understand what they're following. All right, so the NASDAQ is the Q and the E-mini is the SPY, right? Or you could look at it like this, or you can just look at like the S&P 500 here. And, you know, or you could just look at the E-mini, which is the same thing, versus the NQ. All right, either way, the NQ is the NASDAQ. The ES is the E-mini or the S&P 500, right? So ES is S&P 500, NQ is the NASDAQ. In terms of which one's better, it's subjective, like it's opinion based. So I can't say which one you're going to like better. I personally like trading the NASDAQ better, but it does have much more volatility, so it moves faster. So like the NASDAQ has a bigger range, much more volatility, even though the profit per tick on the NASDAQ is about $5 per tick. In the E-mini, I think is 10 or 12 something per tick. The NASDAQ moves way, way, way faster than the E-mini. Most of the time they'll look similar to each other. There's a 1 hour chart, so let me put a 1 minute chart up. So again, like most of the time, like look, they're gonna look very similar to each other most of the time. So again, here's the S&P, here's the NASDAQ, basically the same thing. I like the NASDAQ more because it gives a little bit better liquidity and it's a little bit more rangy, so it's easier for me to scalp momentum. But again, that's just me. Everybody's different. Crypto has been on a nice little bull run here too, man. Look at Bitcoin. Bitcoin back over 26K. AMC still struggling. GameStop. Do y'all think this movie is going to help GameStop price? Is the question. Do y'all think it's going to help GameStop price? The other question that we got today. It's possible, but it's highly improbable. Foo. So yeah, it's possible to make 2% daily, but you're not going to. It's possible for me to win the lottery 10 times in a row. Doesn't mean I'm going to. And again, you can make a big percentage. All right, it's possible to do so, right? Like basically what you're saying is that you could calculate it by the end of the year gains and then divide it daily 365 or however many, not 365, but however many trading days in a year. Regardless, like I understand what you're saying, and it is possible, right? But that's not really making 2% a day, right? That would instead be like if I hit really lucky on an option play and I made 1,000% on that option play, and then I divided it by how many trading days are in the year, and then I claim to make that much every day, right? That's not true because that was just kind of a lottery win in a trade, right? Like you're essentially winning the lottery with that option play, And again, it's not about whether you can do that. It's about whether you can recreate that year after year. Anybody can take big risks and swing big and make a bunch of money, right? Make a big percentage of their account. Anybody can do that, right? I've got 200K in buying power in this TOS account, right? I could throw money at the wall and go super crazy with size and make money most of the time doing it and take a big risk to make a big percentage. Anybody can. The problem is like you're not going to be able to continue to do that. It's not sustainable, and eventually you're going to lose your whole account trying. So it's like it'll go somewhere where like I can keep adding to losses and make money, but it'll go something where like make money, lose the entire account is what the cycle would be. And so it misleads a lot of new traders into thinking they've got some wildly profitable system when really they're just adding to their losses, and anybody could do it. I could take a big risk today and make big money. It doesn't mean it's sustainable or that it's actually a profitable system. And that's the thing to really understand. All right, guys. Again, I bought a little bit of Oracle. We'll see what it does. The SPY still flat. GameStop. Do y'all think GameStop will go up from this movie? Like, do y'all think GameStop will go up from this movie? I don't freaking know. I hope. Again, I'm watching it. I hope we get another crazy squeeze. Honestly, some of the most fun trading times in my life were during the GameStop crazy squeeze because we used to cover GameStop. Like, for a lot of people here, if you've been here long enough, you remember my channel kind of got big when we covered GameStop. Now, eventually, we kind of matured a little bit and went over to economics and investing and trading instead of YOLOing GameStop. But like, some of my most fun time streaming was when we streamed GameStop. But again, what kind of puts a little bit of a damper on it is that, like, I remember being in GameStop and I remember watching GameStop and having thousands of people here. Like, we got some views and we had like thousands of people there when we were covering it. And there were some fun streams too. We had like OBS, so we had different overlays. I remember I was like a leprechaun, and then I was an eagle, and then I was the Wizard of Stonks, and all this fun stuff. But again, GameStop ripped up to like 500 plus, right? It ripped up to like 550s. And at the time, GameStop was previously like $4. So it had gone from like $4 to 550s. And then I remember telling my viewers, I was like, yo, look, if I'm in GameStop at $4 and we're up at 550s, I'm gonna take some profit here, right? I'm gonna take some profit. Like, that's the smart thing to do. That's the wise thing to do. Like, don't be dumb. Like, lock in your profits a little bit, guys. Lock in your gains some here, team. And then all of a sudden, like, you know how that community was, like, they just said, oh no, this dude told us to sell. This dude's not a real supporter of our movement. And like all this nonsense. He's like, yeah, I'm gonna PM you whenever GameStop's at $1,000, brah. You know, and it's just kind of like, all right. And like they just turned into massive haters all of a sudden. And then in hindsight, GameStop's now down at, you know, I know it's post split, but GameStop's at $17 now. And so like I was right at the time. But it's like there was so much emotion in that. There was so much emotion. There were so many traders trying to influence other traders and telling them not to sell. It was just crazy. It was chaos, but it was fun. You know, it was also when like Dogecoin, Cardano, AMC, KOSS, EXPR, like we had some crazy squeezes in that period of time, and it was fun. It was fun to cover all that stuff. But you know, the crypto, like Bitcoin was at like 60K plus. It was just a crazy time. Yeah, for sure, Cal. Yeah, Big Papa Paper Hands was my name. Yeah. Yeah, it was fun. Yeah, chat turned on me quick, dude. And again, that's probably when I started to say, hey, this community is not necessarily good for traders. Like if GameStop's up at 550 and other people are getting mad because somebody decides to take profit there and then like shaming them and insulting them and calling them names, it's like, all right, well, this community is just full of emotion, you know, not good emotion either. What are your thoughts on CPI? Core CPI expecting to go down month to month, right? So last time core CPI showed up at 3, or was it 4 point? Let me see. So core CPI expected to decrease month to month. Right, so core CPI expected to drop from 4.7% last month in July to 4.3% this month in August. And again, core CPI is CPI excluding food and energy prices. So it's expected to decrease month to month. Not decrease, but expected to slow. Again, it's important that I clarify, like, it's expected to slow year over year. On the month, it's expected to stay the same at 0.2% last time, 0.2% this month for core. Regular CPI expected to go up 0.4%. So last time it was at 0.2 on the month. For regular CPI, this time it's expected to go up at 0.6. Regular CPI year over year expected to increase 0.4% as well, from 3.2 to 3.6%. And so, yeah, that's basically it. Fed is expecting 3.8%. Yeah, well, the other big one is going to be the personal consumption expenditure as well. Like PCE data, very relevant data, like really important for this type of stuff. So like PCE data is really important, and I think that's next week. So like so again, I'm going to go ahead and explain the procedure of all this stuff, right? So basically, the consumer price index is how much inflation is going up or down or whatever, you know, for consumers, for buyers. You know, there's two sides of that coin though. There's CPI, which is today, consumer prices increasing or decreasing or whatever. And then there's PPI, which is the producer price index. It's sellers or businesses, right? So today's consumers, tomorrow's is business inflation data. It's all relevant to when you zoom out, it's relevant to everything, because every 6 weeks the Fed meets to raise, cut, or pause rate hikes, right? The logic of raising rates is because if inflation is really bad, you know, the Fed's preferred tool to use to combat that inflation is raising rates, right? When they say they're raising rates, they're raising the federal funds rate. When the federal funds rate goes up, it makes banking more expensive. And so banks in turn raise interest rates to consumers and everybody really. And once interest rates go up, people stop spending as much, right? People stop spending as much, and in turn it combats inflation, right? That's the reason for it. It happens every 6 weeks. This next one is next Wednesday. So in exactly a week from now is when the next FOMC rate hike decision is. And again, the next FOMC rate hike decision, they're expecting a pause or a skip. But you also have to understand a little bit more nuance behind it. Like the Fed prefers not, I mean, the Fed still looks at CPI, I'm sure, but the Fed's preferred inflationary gauge is not CPI, which is really like CPI is the most watched one, right? Retail and everybody else watches CPI. Like CPI will have thousands of people here at 8:30 and 40 minutes when this drops, right? So we'll have thousands of people here when it comes out. And But again, the Fed's preferred metric gauge, whatever you want to say, is not CPI. It's something called the personal consumption expenditure. It's called the PCE data. So PCE data is what the Fed prefers to use for their inflationary gauge. And I believe that drops next week, but it's going to drop. The interesting thing is that it's going to drop after, after the rate hike decision, right? So PCE data comes out. Or no, I'm sorry. So next week we do not have PCE data. So it's actually the week after. So PCE data doesn't drop until the week of the 25th. So not next week, but the week after that, PCE data drops. Friday, the 29th of September is when the next PCE data drops. Last time we showed up at 3.3% on the year. Core PCE is the big one though. So core PCE is expected, or the last time core PCE showed up at 4.2% on the year and 0.2% on the month. It was basically as expected. But like this CPI report is really interesting because what it means is that for the first time, like lately, we have seen inflation go down month to month. Not go down, but slow month to month. They're actually expecting it to increase this time. And so it's a little bit different than the rest of the CPI reports. And what a lot of people are speculating on is if inflation data comes in really high today, does that mean the Fed's more likely to raise rates during the next cycle? Again, the big release after today is Wednesday next week. Wednesday next week, and exactly a week from now, that's when we have that rate hike decision on what the Fed choosing how much they're going to raise rates, if they're going to raise rates. Again, almost everybody's expecting a skip or a pause or whatever you want to call it for the rate hike decision next Wednesday. And again, the real question is if CPI comes in high today, does that mean the Fed might consider raising rates the next cycle? I still think we're probably going to pause or skip. If you look at the percentages here, again, 93% of people expecting a pause or skip. We're currently at 525 to 550 in terms of the federal funds rate. And only 7% of people think we're going to raise that 25 basis points. You can see from 550 to 575. So only 7%. Everybody else, 93% of people aside from that, think we're going to pause or skip. The market also just went green on the day. So you can see the NASDAQ just popped up, went technically green on the day. It's up to 373s. The SPY up to 446. So SPY is technically green on the day as well, but not very much. Yeah, this time last year, Brandon, was freaking crazy, bro. Inflation was obscene. That's why people acting like inflation hasn't gotten better must not have been paying attention last year. Because, dude, inflation was chaotic last year. It was at 7-8% for CPI data, which is really high. Again, now it's at 3 something. You know what I mean? So it's gotten way better. Even gas prices have gone down. They're still not cheap, but they've definitely gone down relative to what they were a year ago, and a little bit over that. And so inflation has gotten better over time, especially energy. And again, every time I say that, people are like, oh, inflation isn't better, because the prices still aren't good. It's still not conventionally good for sure, but it has gotten a little bit better for sure as well. And even if you look at pure CPI data, right? CPI data is coming better than expected almost every cycle for a year plus now. All right, guys. Long or short? Yeah, I'm not sure. Looking at our poll numbers here, we did a Twitter poll as well. Got some votes. 65% of people think we're going to come in higher for CPI. 16% think lower. 18.5% think as expected. We can look at our YouTube poll as well here. We got about 1,000 votes or so. 51% think higher, 26% think lower, and 23% think as expected here. So again, most people voting right now think CPI is going to come in high. You can look at the Q, the NASDAQ. We're at 373s. SPY at 446s. Yeah, no, I'm in Exxon right now, and Exxon has been doing much better, to be honest. Much, much better. Apple fighting its way back, too. We bought a little bit of Coca-Cola yesterday. We might add some to it, but again, I'm going to wait for CPI and the rest of this stuff to drop. Microsoft's still doing nice. PayPal doing okay. I'm in a Roblox call option that expires October 25th. Honestly, I'm a little nervous about it. I mean, I'm not super nervous. Like, I could always sell, and it's not going to be the end of the world. But, you know, I thought we might bounce up to $30 a share, but Roblox has just been struggling. What are you going to be playing after CPI if it's lowered or higher? What do you mean, like music? Impact on Bitcoin? I have no idea what Bitcoin's going to do. Nobody really does, man. I mean, we could try to speculate on what Bitcoin does, but nobody really freaking knows what Bitcoin's going to do here, man. Again, Bitcoin at 26.3 thousand right now. It's had a nice little comeback over the last couple days, really. We dipped under 25K for a split second. It's just been really volatile. Like, if you look at so like here's Bitcoin on the right. It's still pushing up some, but if you look at a 10-day chart and you zoom out, you can kind of see how volatile it's been, man. Big range, sideways, but big range. So again, huge increases, big pullback, and then flat, and then dipped all the way back down under 25K, popped all the way back up. That's the trend of Bitcoin, so it's not really the greatest looking chart right now, but it's definitely doing better than it was. And today's still pretty good. Again, we can see Apple, which Apple had their conference yesterday. Yeah, again, the reality of it is nobody knows, man. Like again, running this YouTube channel, I get a lot of interesting behavior from people, you know? Like, again, my general philosophy with everything is like the more somebody claims to know what's going to happen, the less they probably do, you know? Because again, you get people who just like, again, the way I see it is like, anybody that really pays attention to CPI, and again, I cover this data every freaking month, like, and I have for years, right? I cover this data every month. I have for years. I interpret it every month. We watch it every month. We watch all the different economic data every single month, the rate hike decisions, Jerome Powell press conferences, all these different things, right? And anybody that watches it regularly, like I do, understands that it's not really super predictable. Like, it's not really that predictable. Like the edge that you're going to get trying to predict not just what the results are going to be, but the market's reaction to those results is very up in the air. You know, and again, you could try to predict the results. Like, that's fine. But nobody knows how the market's going to respond to it is the thing, right? Like predicting how the market's going to respond to the results is even more difficult. And so not a very edge heavy thing. And so again, when somebody acts like they know exactly what's going to happen from this report, I usually just kind of say, all right, this person's new, right? They just started watching this a month or two ago. Because again, to my credit, like, anybody that's been watching this as much as I have understands that the edge in predicting is very low. Same thing with most economic data, right? It's always better to, in my opinion, to react to the data instead of trying to predict what's going to happen, because again, earnings can come in better than expected EPS, better than expected revenue, guidance comes in good, and then it drops 10%, you know, or vice versa. It can have bad EPS, bad revenue, bad guidance, and rip up 10%, you know? And so just understand, if the market was that easy, everybody would be rich. If I could sit here and say, hey, if CPI comes in light, I'm going to click buy. If CPI comes in, or if CPI comes in low, I'm going to click buy. If CPI comes in high, I'm going to click sell or short and just ride off into the sunset rich. Everybody would be rich. You know, it's not that easy, guys. All right, guys, we got about 800 people here. Still got 30 minutes left. And so, again, bump those like numbers up. Agreed. Your philosophy is the reason I follow your channel and come here for economic data. You're unbiased and realistic, which I dig. Hey, thanks, Brandon. Yeah, we appreciate it, man. You can't please everybody on the internet. You learn, you know. And a lot of the biggest haters are people that like either know me in real life and are kind of like jealous or envious, or people who've tried to work with me before, and you know, for whatever reason, it just didn't work out. And you know, you realize like some of the biggest haters are people who have tried to create their own channels and failed, and so now they're just, you know, for whatever reason, they just can't let it go. But appreciate the support, man. Genuinely do. I know most people here are great, super kind, and just genuinely cool. So thank you guys so much for watching CPI here. Again, we're going to get thousands of people here because we cover it quick. So if you want a place that gives you this data fast, this is the spot for it. Again, we cover it very quickly relative to most everybody else. And we are ready, guys. We still got 30 minutes, though. 30 minutes. Again, tomorrow is actually a really busy day as well. So tomorrow, and again, the last few weeks have been slower because we just haven't had any economic data come out. You know, again, a couple weeks ago, they had 1 week where they had PCE data, GDP data, non-farm payroll data, unemployment data, and non-farm employment change data all on the same week, right? And so that kind of got a lot of the economic day out. We had one busy week, and then the rest of the weeks have been slow. And again, they don't usually do that. Usually they cover it. I think it was because it was a holiday week, but they usually cover it where it's more separated than that. Same thing with earnings, right? Earnings season came around, and like for whatever reason, Apple and Amazon are doing their earnings on the same day. And I hate that because I want to be able to cover both of them. I want to be able to cover Apple's earnings call and Amazon's earnings call. But when they do it the same day, I basically have to pick one, which is usually going to be Apple because Apple's just a larger company. Apple gets more eyes on it than Amazon's earnings. We also have the ECB press conference tomorrow. So tomorrow is actually a really busy day. Again, we have the ECB rate hike decision, which is Europe, like European rate hike decision. ECB stands for European Central Bank. We have core retail sales data tomorrow. So core retail sales expected at 0.4% uptick in August. Initial jobless claims numbers. So how many people are filing for unemployment is what jobless claims are. PPI, which is, again, today's CPI, the consumer price index. Tomorrow is PPI, the producer price index, which is seller or producer or business inflation. That's tomorrow. It's the other side of the CPI, PPI coin. And again, retail sales, core retail sales. We got the ECB conference. It's a busy day tomorrow, too. A lot of stuff going on. What? Yeah, we're getting August CPI data, Jamie. Yeah, so that's what today is. Today's August CPI data. CPI data for like that individual month occurs 2 weeks after the month ends. So today's 2 weeks later after August ends. So we're covering August data today. September data will be October 14th, so forth. Yeah, we did buy a little bit of Oracle this morning. Yeah, hit the heart button. Hey, here. Hey, what's up, Todd? Yeah, sorry, Todd. I know you were messaging me, bro. I fell asleep, dude. I get my son's in jujitsu, and so when you were messaging me, I was at his jujitsu class, dude, and I gotta watch it, bro, because um, my son, he he didn't really understand jujitsu, right? Like we put him in jujitsu class, and there's so many kids in this class that like he didn't really understand the goal, like the purpose, like how you win. So the first few classes we brought him to, he started sparring with these other kids, and they first put him against these younger kids, right? Because he was new, and he was kind of throwing these younger kids around, like doing well. Then they put him against some other kid that was like experienced, and this kid got him in a rear naked choke so quickly. And then he ran up to me afterwards, throwing a fit, like, this kid just tried to grab my neck. And I told him, I was like, bro, that's the point. That's the goal. That's what he's supposed to do. And so I kind of had to teach my son a little bit. And yesterday in class, this little girl had him in a choke on his back, had him in a choke for like 5 minutes. And so I'm sitting there kind of like worried about him. I see him, he's not tapping, which I told him, first thing I told him was like, bro, you don't get your pride in the way. You just got to tap. And so he's not tapping, but eventually he crawled out of it. Like, he got out of the choke, and he was super pumped to get out of it. He ran up to me saying, "You see that, Dad? I did it. I won." He said. And so, yeah, I was dealing with that yesterday, but it's fun, man. It's fun. My daughter, my daughter's really good for her experience level. Anyways, I'll stop talking about Brazilian Jiu-Jitsu. And yeah, CPI data, guys, 23 minutes. We'll see if the Q can hold over this previous closing price. Again, here's the previous closing price right here, this light blue line. It's right around 373s. It's the level at which it glows from red to green to red. Again, Apple over here on the right side here, slightly green on the day. You can see the SPY. Tesla, again, big increase earlier in pre-markets, kind of selling down a little bit. It's under 270s now. Over the volume weighted average price, though, so we'll see if that spot holds. Gold, where's gold at, man? I haven't even looked at gold lately. All right, gold at 1930s. So gold earlier in the year had its crazy push over 2K. It's mostly been flat for the last but I'm a big believer in gold. Like, some people don't like gold. I don't understand why. Again, if you don't like gold, you're not looking at the stats. I think a lot of people like crypto over gold or whatever, and they think you can only like one or the other, Bitcoin or gold. But like, I say like too much. I got to work on not saying like so much. Anyways, a lot of people, it's not binary, right? You don't have to have one or the other. You can like both. I like both Bitcoin and gold. Because if you look at gold's stats, gold has like 6x'd over the last 20 years. So gold has gone up 6x versus the S&P 500 like 3 to 4x over the last 20. And so gold has been one of the better appreciating assets. And again, to understand this, like with all of this in mind, they're all inflationary hedges. And so like all of these things, the way you have to look at investing, trading is different, of course. But to understand all of it, right? To understand what it really is and like what it really means, these are all inflation hedges. Your job in investing into these things, whether it's gold, whether it's real estate, even getting a mortgage is including in that, and I'll explain that a little bit later. But their sole purpose is to hedge against inflation. I mean, not the sole purpose, but the purpose is to hedge against inflation. And so what I mean by that is, like, if you sit on your cash over a 20-30 year period, you are going to lose money if you sit on your cash, right? Like, you're not going to technically lose money, but things all around you are going to become more expensive. So the way you hedge against that is you buy gold. Again, gold has almost 6x'd in the last 20 years. The S&P 500 is almost 4x. Real estate is similar. And so these are all ways to keep up with inflation so that, everything around you isn't getting more expensive while your money is staying the same. The S&P 500 will give you 6 to 12% a year on average. And so they're all ways to keep up with inflation. That's the goal. Because again, you can sit on cash and cash is fine. I'm not against it necessarily. I mean, I'm kind of against it if you sit on it for too long. But if you sit on cash, you're losing out because your inflation is going to increase around you and things are going to become more expensive while your cash stays the same. And so the only way you can sit on cash, but it should be for the purpose of like starting a business, if that makes sense. If you want to start a business, that's fine. But Two different datas. Yeah, we got there's two different data points, CPI and core CPI. Now there's different time frames. One is month to month, the other one is year over year. And so yeah, there's two different data points, core and regular CPI, but they're both CPI data. The rest of there's four variations of it. There's core CPI month over month, core CPI year over year, regular CPI month over month, and regular CPI year over year. Again, this all drops at 8:30. Again, we are going to cover this live as it happens. Still got about 20 minutes left or so. Never understand CPI and non-farm payrolls. Well, it's all related to inflation. A lot of the time, lately, the market has not wanted to see high economic growth, right? So like, again, I got to stop saying like, I'm working on it. So lately, the market has reacted positively to less economic growth. So non-farm payroll data coming in lower than expected caused positive market reactions. Unemployment coming in higher than expected caused positive market reactions to a certain extent. And the reason for that is because the market fears inflation. And so if, the reason, again, next Wednesday is the rate hike decision. The reason the Fed raises rates is to discourage spending, right? They're raising the federal funds rate, which makes it more expensive for banks, specifically with bonds, to where banks then in turn raise interest rates. When banks raise interest rates, people stop spending. When people stop spending, businesses lower prices to combat that, and thus it combats inflation. So, a lot of the economic data that comes out, non-farm payroll data, unemployment data, PPI, CPI, all that good stuff, a lot of traders and investors and economists are looking at it from an inflation lens, right? They're looking at it in terms of, is this better or worse for inflation? Which a lot of people are seeing is priority one, or enemy number one right now in this market is inflation. And so is high payroll numbers better or worse for inflation? They're going to say it's worse right now. And so, you get something where you have higher than expected payroll numbers and the market tanks, or you have higher than expected unemployment and the market goes up, or you have jobless claims, which is how many people are filing for unemployment week to week. Jobless claim numbers coming in higher than expected makes the market go up to a certain extent lately, because again, less people working means less people spending, which means less inflation problems. And so that's really the way you have to look at it. But again, it's very nuanced, and each individual one is different. So like each individual one is different than the next. And sometimes the market, you're all just analyzing psychology. Sometimes the market wants more economic growth, which is conventionally what the market wants, is more economic growth. They want higher GDP numbers and higher payroll numbers and all that stuff. But sometimes it's the opposite. And sometimes the market does not want that. Sometimes the market wants less economic growth because of inflation fears. And so you got to go into every economic report with that understanding, with that in mind of like, hey, is the market fearing a recession, which means it's going to want economic growth, want higher payroll numbers, all that good stuff, or is the market fearing inflation more? If it's fearing inflation more, it might want less economic growth. And again, because of that, it's very difficult to predict the market reactions to this stuff. Inflation data drops in 17 minutes, so it drops at 8:30. You can see the timer at the top left. Yeah, there's a SPY. SPY still green on the day. NASDAQ still green on the day too. Oh, sorry guys, bumping my mic. All right, guys. CPI inflation data. Y'all ready? Got about 1,100 people here. Building permits next week. Well explained. Thanks, bro. Appreciate you. All good, Chad. Thanks, man. Yeah, I mean, Bitcoin moving. Yeah, Bitcoin's been going up today. Tesla has been fighting a little bit as well. A lot of the market's weighing on tech, which is Tesla and Nvidia. So one of the things, like when I'm trading the E-mini of the NASDAQ, when I'm trading the E-mini of the NASDAQ, most of the time I'm keeping an eye on Nvidia and Tesla, because if Tesla makes like a really quick slump, then you know, or Nvidia makes a really big slump, then it's logical to assume that the S&P 500 is going to eventually react to that as well, since Tesla and Nvidia are heavily weighted in those funds. So it's something like a good habit to build, and when you're trading futures, when you're trading the E-mini, the Nasdaq, whatever, is to watch the big blue chip stocks that make up those funds, because those are really what's influencing them. And so you can get a little bit of a lag or pairs trade if you like see again, if you see Nvidia start to test and break highs, you can get in a little dip buy or whatever, and ride that bounce when it happens. And there's some good ways to trade using that as well. But again, for me, I have the habit of watching those big blue chip companies. Do people think CPI is? Do people really think CPI is going to be higher than 0.6%? There's no way. I mean, it depends on what these are the banks. So month over month, 0.6% is what the banks are expecting. And the way I always try to say, like, it's kind of the rate hike decisions, right? Like next Wednesday is the rate hike decision. Generally, at least a day or two before the rate hike decision, we're going to be polarized in one direction. So whether it's on a rate hike decision or whether it's on a pause, we're going to be polarized in one direction. But for whatever reason, people tend to go contrarian on me. And so even like something like this, 93% of people are expecting a skip on Wednesday, right? You still got some people, and again, this is a little bit too early to do this, right? Because again, this CPI report might influence this, make it different, right? But say this is the day before the rate hike decision, you're still going to have some people that are like, nah, I think we're going to raise rates. And it's unlikely if 9 out of 10 people think we're not. And again, I get it, betting against the market, but generally with rate hike decisions, they're pretty predictable. Like they're usually, number one is that Jerome Powell and the Fed, they don't want to shock people. They don't want to shock people and have everybody expecting a pause or skip, and then they announce a rate hike decision, which can cause brash, like quick reactions to the downsides in stocks. And so you just got to be smart with it and understand, like Jerome Powell, they don't want to shock people. They don't want to shock the market. Jerome Powell does not want to crash under his watch, I promise you. And yeah, you got to think of it with that in mind. All right, so looking at our YouTube polls here, we still got like 12, 13 minutes left. CPI data, 62% of people on Twitter think we're going to come in higher, 20% think lower, 18% think as expected. We got about 1,600 votes on YouTube. Let me see if I can pull this out. There you go. 24% think as expected, 25% think lower, and 51% think higher. So majority of people on both polls think we're going to come in high today, higher than expected. Again, the expectations today are 0.6% on the month for regular CPI. Core CPI is expected at 0.2% on the month. So a lot of people think we're going to come in high. I don't know. Again, I don't know. My bet was I think we're going to come in 0.5%, and core CPI I think is going to come in as expected. But again, maybe I'm wrong. Again, what are we expecting for yearly data? So yearly data, 3.6%. So I'm going to go with 3.5%. Again, pure guess. Even if I get it right, it's luck. Pure guess. Again, the Q at 373s. Nvidia's still down there. Would y'all rather the dollar index up, the SPY up, or gold up? Dollar index, SPY, or gold up on the right side. I'm going to put the NASDAQ, the Q up on the left. But which one would you guys rather see? Dollar index, SPY, or gold? Higher is bearish due to inflation? Yeah, without question. Higher is worse. Lower is better. SPY, dollar index, gold. Well, can't do all of them. Again, let me know in chat which one you'd rather. SPY, dollar index, gold. Which one? Broken Bitcoin dump or pump? I don't like everybody always phrases it can. Yes, it can. It can dump. It can pump. It can go up. It can go down. It could drop to a penny and then back up to 100K today, but not super probable, brother. I don't know what Bitcoin's going to do. A lot of the time with big movements like this, Bitcoin follows the market, but not always. And, it can vary. What do you expect, higher, low? I think slightly lower than expected, but I might be wrong. Again, I'm pure guess. I really don't know. I try to avoid making any big predictions. And so anytime I do give a prediction on this, I usually tell people just a guess, because it is. Hey, thank you. Thank you, Resh, for crypto, which is bullish, higher or lower. Well, lower is better for universally for everything. Lower means less inflation, lower prices. That's good for everybody. With prices being lower, people can afford more Bitcoin. If prices are lower, people can afford more shares of the S&P 500. They can afford more shares of the NASDAQ. They can afford more shares of gold. Although gold is sometimes seen as an inflation hedge too. So like sometimes gold can go up with bad economic stuff because of crash predictors, and it's kind of a historical hedge, but it's nuanced. Yeah, I don't know why Apple drops every time a news release happens. I think lately it's been underwhelming debuts. I think the press conference has just been underwhelming lately. All right, guys. Hey, we got 8 minutes. 8 minutes. Again, do me a favor. Bump that like button. Let's try to get 500 likes before this release here. If you haven't already, 500 likes. I feel even if they pause next week, Jerome Powell's speech will be hawkish. Yeah, I mean, the big thing is going to be what he says. The rate hike decision is already pretty sketched in stone. I told people already, I think even if inflation data comes in high today, I still think we're going to pause next meeting. A lot of people said, oh, well, if we come in high today, it depends on how high, I guess. If we come in over 4% year over year, then maybe it's arguable that, we do something else. But even still, like 3.6% is what we're expecting, 0.6% on the month. But I think even if we come in high for inflation today, I still think we pause or skip. But that's pretty predictable. The big thing is going to be not whether we pause or skip, because again, that's pretty predictable. The big thing instead is going to be what Jerome Powell says during the actual press conference, where he's still going to say inflation is elevated. He says that every time. But what does he say during the press conference? What questions they ask him during the Q&A? All that good stuff. Again, here's gold. Gold dipping down a little bit in anticipation of this. I mean, I can always put 3 up. What do you guys think? 2 or 3? All right, so we'll put the Dixie up. There's the dollar index. So here's the dollar on the right, gold in the middle, SPY on the right. I'm going to make this the Q on the right, the NASDAQ. I'm going to make this a little bit larger here. All right, guys. Powell didn't do his job right. If it's higher, would gold continue to drop? Probably, but it's never for sure. Yeah, it's at 8:30, guys. So you can see the timer on the top right, or the top left, I mean. So we got 6 minutes. 6 minutes, guys. Again, generally, nobody knows what we're going to get here. People always get weird, like they want me to try to predict. Again, to understand what it is, the Dunning-Kruger effect is very true with stuff like this, where the people who act like they know the most about what's going to happen generally know the least. This is not super predictable in terms of reactions. You could try to predict whether inflation data will come in high or low based off of like pricing, but the market's reaction is going to be even less predictable. And again, the people who generally claim to know the most about how the market's going to react usually know the least. So just understand, it's much better, in my opinion, to just react to this type of stuff instead of trying to make some wild, crazy good prediction. You got a 50-50 shot, right? But yeah. Hey, thank you, William. Does oil and stocks have inverse correlation? Sometimes. Depends, but sometimes they do, yeah. No crypto for me. No, thank you. Physical companies only. All right, guys, we got 5 minutes. 5 minutes. Dollar down, Dow up. Yeah, I mean, the dollar is going to drop most likely with everything else. So if the SPY moves up, the dollar's going down, you know, and vice versa. I got a little bit under 2,000 people here. So again, hit that subscribe button. Again, let's try to bump those numbers up to 50 or 500 likes if we can. We got about 400 or so, a little bit less. So again, subscribe if you haven't yet, team. We definitely appreciate it. Again, CPI today is expected to show up at 3.6% on the year, 0.6% on the month for regular CPI. Core CPI is expected to show up at 0.2% on the month, which is neutral relative to last month, and then actually expected to decrease from 4.7 to 4.3% on the year for core, right? And core excludes food and energy. Yeah, that's the reason it's not really predictable, is because it's already baked in, priced in, however you want to put it. People want to be spoon-fed, yeah. Yeah, I'm going to go with 3.5% is my guess, right? 3.5 is kind of what I'm going with. So yeah, 3.5% is what my goal is here. 3.5% is my guess. There's gold, rip it up. Again, the Q and the NASDAQ basically flat. So the left side is the NASDAQ here. This is the NASDAQ. It's basically flat on the day. You can see that previous closing price. It's the level which it goes from red to green, green to red. All right, we got a little bit over 3 minutes left here. A little bit over 3 minutes left. You also want to make sure you hit the live button next to the play button to make sure you're fully caught up on stream. Everybody, so again, you want to make sure you're fully caught up on stream, that you hit the live button next to the play button. Silver will fall more. If I'm in a trade, you recommend to cut it before the data comes out. I mean, I'm not going to tell you what to do, Tom. If it was me, I would, especially if it's a blue chip company. If it's a blue chip company or like something that's going to move from CPI, personally, I would cut it. But again, that's just me. I'm not sure what you should do, brother. All right, team, get ready. Again, make sure you hit the live button next to the play button. We got about 2.5 minutes. You can look at the top left, and there's a timer. Let me know your percentage. What's your percentage? 3.7%. Expectations are 3.6%. So again, let me know your percentages. Again, 3.6% is expected on the year for regular CPI, 0.6% on the month for regular CPI core, which excludes food and energy, expected at 0.2% on the month, unchanged. Year over year is expected at 4.3%. So again, list your percentages in chat. Hit the live button next to the play button. Make sure you're fully caught up on stream. Also, we are going to throw this bad boy in sub-only mode. All right, so we are in sub-only mode, so everybody announce yourself. Show us that you're subscribed, and if you haven't yet, subscribe. You can see gold popping up a little bit. The Dixie, again, this is the dollar index. It's usually going to have an inverse correlation with markets. The NASDAQ is on the left side here. This is the big one. Here we got about 1.5 minutes, a little bit less than that. Here we go, guys. Oh, we need only 50 more likes to break 500 likes on the stream. It's free to subscribe, dude. Do it now. Doesn't cost a penny. All right, team. All right, 45 seconds, guys. 45 seconds. Here we go. I'm going to pause this because this isn't really right. It's a little bit, we still got about 30 seconds here. 30 seconds. So again, hit the live button next to the play button. Make sure you're caught up. Let's do this here. We got all our sources up. We're ready. 30 seconds here, team. 30 seconds. All right, here we go. 15 seconds. Three seconds, 2 seconds, 1 second. And there's the report. Big decrease, guys. Big decrease. Waiting for CPI. CPI just showed up. Core CPI 4.3%. Core CPI month over month went up 0.1%. came in as expected for month-over-month CPI at 0.6%. Regular year-over-year CPI went up to 3.7% versus 3.6% expected. So slightly higher than expected CPI data universally. So slightly higher than expected. Regular year-over-year CPI, again, came in at 3.7%. 3.7% versus 3.6% expected. Month-over-month CPI came in at 0.3% versus 0.2% expected on the month. Core CPI came in at 4.3 on the year versus 4.3% expected. So everything came in either higher than expected slightly, so 0.1% higher than expected, or neutral. So mostly neutral, slightly higher than expected here. We'll see what the SPY does. Or the Q is all the way down to 371.50s here. 371.50s. Again, everything came in either 0.1% higher or as expected here. So again, we'll put all this data up on screen. Again, 0.6% month to month. So neutral month to month. Year over year came in at 0.1% higher than expected. And again, the market is dipping down slightly. The dollar index is rising because, again, there's usually an inverse correlation. Gold is dipping down with the market, as I said, mostly following the market. But 3.7% year-over-year data here, guys, 3.7%. There's the report. And, again, we cover this quick, guys, so subscribe because we cover that data fast. We cover that data within like half a second. So, again, we've got our sources. Subscribe if you haven't yet. And, again, we're putting all this data up on screen. Bear with me. Pun intended, I guess. Market's dipping down a little bit now, team. We got over 3,000 people here. There you go. That's CPI data. Again, higher than expected. CPI comes in higher than expected by 0.1% on the year. Neutral on the month. Core CPI showed up neutral completely except for monthly core CPI data, which went up 0.1%. All that data is right there. Market's bouncing back a little bit. Not the biggest reaction to CPI. Usually we get a little bit larger of a reaction here. So not the biggest reaction. All right. Yeah, so there's the numbers right there in chat. Market's testing lows. Gold is trying to hold. See if we can trade this. And again, if you want to day trade with me, Top Step is a funded account program in futures. They give you a demo. They test your skill. If you can hit the target in futures while following their rules, they fund you between 50 to 150K with a 90% split. You can see you can trade the S&P 500, the SPY, basically the E-mini. You can also trade basically the Q. Bump my mic. You can also basically trade the Q and what's called the NASDAQ. The NASDAQ E-mini in futures. Here's basically the NASDAQ in futures. And I can day trade short, buy market, sell market. You can see it's the same price action right here. So again, you can kind of see this is the same price action right here, but there's no PDT in futures, right? So I can day trade short the NASDAQ. Look, dip and a bounce, dip and a bounce. Market's starting to bounce back a little bit, but again, I can day trade in futures with no PDT rule. And Top Step is the most legit funded program in the world. They pay out millions every year. They fund thousands a year. They give you a demo. They test your skill. It's most new day traders lose money. It's so much cheaper to try out Top Step, still have some pressure, still learn how to trade. Free funding coaches, all that good stuff. If you lose, it's not the end of the world, but if you're good enough to pass it, you get a 90% profit split. You get to keep your first 10K in profit. And so it's really the best of both worlds. It's limited risk, but if you're good enough to pass it, you still get a lot of the rewards that you would if you put the money up yourself, but just with less risk. Again, the base combine right now is $49. Very useful. If you want to check it out, they are a sponsor of mine. Great way to help support the channel. There's the link in chat right now. Market's starting to bounce back a little bit. The dollar index just cracked lows. Gold bouncing back. The SPY bouncing back. We're up to 372s. It doesn't mean much yet. You can see the Q right here at 372s. I'm going to put the SPY chart up here. Here's the SPY. Again, we're at 445s on the SPY, 445. So the S&P 500 bouncing back as well. Dollar index starting to drop. So again, not the biggest reaction here. Not the biggest reaction here. So I still think we're almost certainly going to skip or pause next Wednesday. Yeah, I mean, most things were as expected. And so again, core CPI month to month came in slightly higher. CPI year over year came in slightly higher. Everything else was as expected. So everything else was as expected. Core CPI year over year was 4.3 versus 4.3. CPI month to month, which is the biggest one, was 0.6%, 0.6%. And so, the big releases, which again, if you look at which ones are like 3-star versus 2-star, CPI month to month is 3-star. CPI year to year is 3-star. CPI month to month. Core CPI month to month is 3-star. The rest of them are 2-star or 1-star, right? So the biggest ones came in 2 neutral and 1 slightly worse. Is the reading. And again, the markets are starting to push up a little bit more. We're pretty much flat from this report. I'm going to put up 2 charts here. And again, you can see the SPY on the right, the NASDAQ on the left. No, jobless claims are tomorrow, Lucid. Yeah, it's not overall positive for sure, Jessica. Like, this was not a good release, like, regardless. But again, that's kind of my point, is that you can have a neutral / bad CPI report, and then the markets are kind of not really acting this way, which is why I'm trying to tell people, like, predicting what's going to happen relative to the data is even more difficult. Again, I cover this stuff every week. Trying to predict what this data is going to show is much harder. It's much more difficult to do correctly and to do so accurately. Bet no one makes over an M a month here. Yeah, but you know what? Most people who do make that type of money don't do. They don't go to people's streams and try to insult them randomly. That's usually not a big sign of success, brother. So I mean, hey, I definitely don't make over $1 million a month, but yeah. No, you should already get the discount on Top Step here if you want to check it out. Again, there's the link. All right, market started to go green on the day. Testing that previous closing price is at 372.50s. Yeah. Again, I live good, bro. I live good, man. I have no complaints about my life right now, you know. Again, I got a library in my office, you know. I'm not even trying to brag. Like, I'm not saying I'm better than anybody or anything. I certainly didn't make all this money trading. I'll put it that way. But I would rather somebody that tells me the truth about that than tries to fabricate it, you know. I was expecting a higher number with impact of high gas price on commodities, so this is not that bad. Yeah, it's definitely not that bad. I mean, again, the only ones that were higher than expected were core CPI month to month and CPI year over year. Right, those were the only 2 that were worse than expected. Were core CPI month to month. Again, they were both up 0.1% higher than expected. That's it. That's the only thing. The rest of them came in neutral, and so it's pretty neutral here, relative to the report. They hate on you because they ain't you. Yeah, 100%. How do you think mortgage rates will react? On a longer term perspective, a lot of the time, if you want mortgage rates to go down, you need the market to go down, you know. Not always, but, and I think that's where I get a lot of people in chat that are mortgage people that want the market to drop because they want mortgage rates to go down, because right now it's really hard to do business as a mortgage broker because interest rates are freaking 7-8%. You know, I'm a real estate agent myself here in Texas, right? So like, that's a big nuance of it. But again, that causes like so many people to be bearish because they're so desperate for interest rates to drop. Again, Q and the SPY, mostly flat from this report. Again, the report came out here. We're basically flat right now. Yeah, all good, Mr. Podcast. I'm just kind of messing with you, bro. Again, Bitcoin, not really doing that much, man. Again, Bitcoin flat too, but I guess it's better than just giving up all the gains it made over the day. So, flex if you want. You know me. I'm the top 3 most humble people ever in the world right now. I mean, when you're this handsome and like, you know, successful in life, you know, when you look this good and everybody's like, oh, John, you're so handsome. You know, it's really hard to stay humble, but I'm definitely one of the top most humble traders on YouTube right now, for sure. Definitely one of the most humble. The most humblest, I think is the right word, right? The most humblest. Definitely one of the most humblest traders in the world right now. You know, humility flows through me like water. Bruce Lee, you know. Yeah, so anyways, most people were right. Most people bet that inflation data would come in higher than expected. And that's what we got. Inflation data was neutral to high, right? Versus expectations. So again, Came in at month over month core CPI, excluding food and energy, 0.1% higher month to month than expected, 0.3% versus 0.2%. CPI year over year for August, 3.6% was what was expected. We showed 3.7%. Regular CPI month over month, which is generally the most important reading, was neutral, 0.6 versus 0.6. And again, CPI year over year for core CPI, excluding food and energy, was neutral. It came in at 4.3% versus 4.3%. And again, the market's pretty much showing this. I mean, it's pretty flat here. Market sideways. Now, again, subscribe if you haven't yet, because again, we cover this stuff live every day. The most important thing to understand is that this is just the first half of this inflationary token. This is the first half of that inflation coin, right? What I mean by that is tomorrow we get the other half of inflation. Today is consumer inflation. Tomorrow we have PPI, which is producer inflation, seller inflation. Business inflation is tomorrow. We also have jobless claims numbers, which is how many people are filing for unemployment. We have retail sales data. And again, we're also going to be trading live at the opening bell. And so stick around today. We are going to be trading live at the opening bell. I don't think we have any other economic releases today. You have a strong YouTube channel. Do you plan on going ghost mode, or will you be uploading a lot in the future? I mean, I don't have any plans to stop. You know, I don't know why I would. It's the hat, bro. Listen, it's the hat, dude. Listen, I take the hat off, bro. My hair's all crazy, man. You know, the humility just leaves me. You know, the humility just leaves me when I take the hat off, bro. I'm just glad I have hair, dude. Honestly, in my mid-30s, I'm just glad I have hair, bro. Hey, thank you, Nas. I appreciate you, bro. Bitcoin, will it hold? Bitcoin at 26K. Put it back on. I know, dude. I'm like, what was the dude in the Bible? Samson. Let me talk to Samson. Never mind. Y'all don't understand that reference. Y'all are too young. Hey, thank you, Charlie. I appreciate it. Do you think market will go up or down? I have no idea, bro. I'm watching the volume weighted average price. Here's the cue. So the volume weighted average price is generally like a trend indicator. So one thing I'm looking for is to see if it does this. We break over the VWAP, pull back, bounce off of it, right? That's a very common pattern I've been teaching people for years, like for 3 years now. Break over VWAP, pull back, bounce. So I'm just looking to see if we can hold that trend right now. Again, so yeah, break over VWAP. We're going to see if we hold the VWAP, which is, you know, with technicals, again, we talk a lot about technicals. And I hear a lot of traders that just have all these crazy indicators, right? They've got the 9, the 12, the 20, the 25, EMA, SMA, combo, crossover stuff. The problem with moving averages is that you don't get consolidated volume of traders that are interested in it. Like the good thing about the VWAP is that, and people criticize me for saying VWAP. I've changed it to VWAP, but I feel like VWAP sounds like Jersey. Like get the khakis, you know, VWAP. Anyways, the good thing about the volume weighted average price is that you get a consolidated group of traders that are actually paying attention to it. So like you got other traders watching it, and with technicals, it's all about how many eyes are on the different technical levels, right? Whether we're talking about support or resistance, whether we're talking about indicators in general. And so the good thing about the volume weighted average price is you just got a lot of traders that use it, a lot of traders that trade it. We've got some great course content, some free course content on our YouTube channel. And if we break underneath it, again, number one, right now, the VWAP can show you 3 different things. All right, so it can show you if we maintain over the VWAP. So if this is the VWAP here, and we maintain over it like this, or that's backwards. I'm sorry. If this is the VWAP here, and we maintain over it like this, then we're in an upward trend. If we break below it like this and then hold underneath it, we're in a downward trend. And if you chop in between it like this, if this is the VWAP, and then the market's just going like that, then it's showing you a choppy neutral trend. That's the thing to understand about the volume weighted average price. Pretty simple. Again, though, right now we're in a period of what I would say is high volatility because of the CPI report that just came out. And so whether we're going to hold here is different. After the opening bell, it's a level I'm watching. And again, you can see the cube bounced and held over it. Let me trade some futures here. But again, we are in a period of high volatility, so just be smart, be careful. All right, so we just scalped about 90 bucks. Again, this is what I call a VWAP reclaim. This is a strategy I've been teaching people for years. Again, it's called a VWAP reclaim. It's when you dip under the volume weighted average price for a split second and you think the trend's about to go down, and then you quickly pop back over it, hold, and then bounce, right? I call it a VWAP reclaim. Same thing here on the NASDAQ, which is what I actually traded, where you dip under it for a split second, break back above it, bounce. Again, it doesn't mean we're going to continue in this direction. I have no idea, but don't use indicators. Well, we use some. Yeah, I see a lot of people see my does YouTube pay for live stream views too? Yeah. I mean, yeah. Right by the beach. Yeah. Childhood movie of mine. Maybe not childhood, maybe like a teenage movie of mine, but still. Love it. Dave Chappelle, man. Sir, need to ask you a question. Should we do trading based on indicators or should we use technical trading? They're the same thing. Indicators are technical. Or are technicals, you know. It's the same thing. Indicators and technicals aren't two different things. They're the same thing. Crypto market dumping. Yeah, I mean, Bitcoin's starting to pop up a little bit. Again, here's the Q on the left. Here is the Bitcoin futures contract. It's back up to 26K. Again, looks a lot like stocks, which is kind of what I told people. The only time Bitcoin really has like a really obvious negative correlation with certain stocks is banking, right? Like when banking was really weak earlier this year, crypto flew up. Bitcoin specifically flew up because people saw it as fear in the banking system made people gravitate towards Bitcoin, if that made sense, right? So like when we had all those regional banks struggle and fail, a lot of money went from those to crypto as like a hedge against failures in banking. But aside from that, most of the time they're going to be like a semi-positive correlation with markets versus Bitcoin most of the time. Same thing with gold as well, unless you get like really bad events happening in gold where like the market's crashing and people are scared, so they're hedging with gold. But most of the time there's going to be a positive correlation, even if you look at gold right now. So look, there's Bitcoin. It looks a lot like the NASDAQ on the left, and then here's gold. Looks a lot like both of those. And so one thing you learn in trading pretty quickly is like the big boys all move with each other for the most part, unless you're talking about the dollar index, which moves opposite. But like the Q looks like the NASDAQ, looks like gold, looks like Bitcoin, looks like the Dow, they're all pretty similar. Now there's going to be small nuances that affect the charts differently each day, but for the most part, when you zoom out, they look similar. Yeah, a lot of people still mad at Apple because they say Apple's conference was underwhelming. I kind of understand, but what's going on with YouTube, man? The live feature looks kind of off. All right, guys. Gonna get ready to trade. We got a little bounce over the VWAP here. And again, this is why we watched the VWAP. But yeah, Apple, a lot of people were just disappointed. They say it was underwhelming results. New charger. And honestly, I'm kind of a Samsung dude. Like I have the Z Fold, you know. But my whole family has Apple, and so I'm actually kind of pumped that now I can steal everybody's chargers because now we're both gonna have USB-C. uh, 10-year Treasury yield bump up against the highest level since 2007 after core surprises. Are you shorting airlines? No. I'm not really a big shorter long term. I mean, you can ask anybody here. They know I'm not the biggest short trader. Again, the reason, like, I'll say this once, I'll say it again. Most of the time, people are misled into being super short biased with blue chips. It's fine to be biased on the short side. If you're talking about very short-term trading, right? You can short-term, pun intended. But you have to understand, the more you zoom out, the less edge there is on the short side. In talking about blue chip healthy companies, those are going to go up over time. And so betting long-term on the short side with blue chips is just a silly thing that nobody should do. But again, you get a lot of people that are just short every month, every year. They're short and they're losing money, almost certainly. Because again, what happens over time is inflation increases over time, and so if you're shorting things over time, you're going to lose money. Now you can take very short positions, but with that, one of my rules is that I don't really short blue chip companies like that. It's just too much risk. Usually, it's the other side. Like if the market's going to go up over time, then what makes the most sense for me as a trader is I'll day trade and I'll swing trade short term on the long side only. And if I'm wrong and it's a healthy enough company like Apple or Amazon or Disney or Google or Walmart or Home Depot, then I could usually just sit on it long enough and eventually it's going to come back in my favor. But I always have risk levels. It's not like I never cut it. But if you really think about it, like if the S&P 500 is going to go up over time, right? Like that's just the truth. It's going to go up over time unless something, it's not 100%, but it's up there. Then it makes more sense to just wait for big pullbacks and just patiently sit. That's the biggest edge. I day trade still as well. Like we day traded today. We're up a little bit today, day trading specifically the NASDAQ. But when I'm talking about longer term trades outside of day trading, I almost never short blue chips. It's just a risky bet. You're betting against one of the biggest statistical edges the market gives you. How do you feel about Disney? I've already taken most of my profit on Disney, to be honest. So you can see Disney ripped up. You can see my average here on Disney is $80.98. We got 55 shares left. We had hundreds, and you can see on the last little bit, we're up $150. So we took some profit on this pop yesterday, as well as I think it was at the pop yesterday. We're still holding a piece, but our average is way down here. People use every time Disney has a red day, you get some Disney haters that bring it up. But like, again, my average is here. And so we've been taking profit the last few days. It's painful. I like honest traders. Yeah, I mean, yeah. John, I watched The Big Short over the weekend. It was a little confusing. No. Again, I talked about this a little bit ago. When I first watched The Big Short is what I credit to getting me into trading. I watched The Big Short. It got me into trading. Again, just to recap. So the market has reacted to the latest consumer price index inflationary data. And again, you can see the NASDAQ here actually being green relative to that report. I don't know if it's going to hold, but again, CPI data came in either neutral or slightly higher than expected. Base CPI year over year came in at 3.7% versus 3.6% expected. Month over month, base CPI came in at 0.6 versus 0.6% expected, so neutral. Month over month, core CPI excludes food and energy, came in 0.1% higher at 0.3% versus 0.2%, and core CPI year over year came in flat at 4.3 versus 4.3%. And again, the market has kind of reacted on the positive side here. It's starting to move up from this report. And so I'm not sure why. Let me know in the comments below why you think the market is reacting somewhat positively to this report. At least initially it reacted negative like you might expect from neutral to higher inflation data, but it has since rebounded, held the VWAP on the NASDAQ, and is still pushing up. So let me know what you think will happen. And again, this is in anticipation of next week's rate hike decision, which is huge. Next week's rate hike decision is big, very important, very relevant, and we'll see what happens. Again, let me know what you guys think. I'm gonna have to mute the music for a second. All right, guys. Again, all right, let's see. So, yeah, NASDAQ's still pumping up, guys. All right, so we're at 373s on the NASDAQ, on the Q. Yeah, the rate hike decision next week will be huge. Again, let's see what let's see what they expect now. So, like, let's see what they expect now. Um, all right, so let's see. Let me make sure you can hear. Okay. Hey, thank you guys. We broke 114,000 subs, guys. Thank you so much. We did break 114,000 subscribers. I definitely appreciate it. We still got 30 minutes until the market opens, and we are going to trade stream live like we always do. And so, yeah, hit that sub button, guys. Hit the notification bell and make sure I monetize the stream. I did. Okay, good. And yeah, again, subscribe if you haven't yet. Hit the notification bell. We definitely appreciate it. Again, we're going to be trading futures at the opening bell. And again, if you haven't already, check out Top Step, guys. So we are going to be day trading on Top Step a little bit today. And again, a lot of day traders, like a lot of people want to learn to day trade, but they end up just getting their butt kicked, dude. Like day trading can be incredibly difficult, and a large majority of people lose. And if you put the money up yourself, you're just going to lose more. And so if you want to day trade, what I recommend, and again, I'm biased because they're a sponsor of mine, but Top Step funded account program is the most legit futures funded program in the world. They pay out millions in actual withdrawals every year. They fund thousands of traders a year. And again, what they do is they give you a demo. They test your skill. If you can hit the target on the demo while following their rules, they fund you between 50K up to 150K with a 90% split. And you get to keep your first 10K in profit. And so what this allows you to do if you're learning how to day trade, or even if you're good enough at day trading, what this allows you to do is get in for 49 bucks a month for the base combine. If you can make 3K in profit on that 50K demo they give you without losing over 2K and following their rules, you're going to get 50K in funding with a 90% split, and you can keep your first 10K in profit. And so if you're good enough to pass it, you still get 90% and your first 10K in profit. If you're not good enough to pass it, which again is going to be most day traders, you're only going to be out 49 bucks. And in futures, you can day trade the NASDAQ here. I might buy this dip. Again, we're up slightly. I'm going to buy this dip right here. We're up slightly. Again, we've been funded on multiple accounts. We're going to just go ahead and scalp that. We've been funded on multiple different accounts. Today in our funded account, we are up 130 bucks. So got a nice little cushion on this account today. No losing trades yet, 130 bucks. And again, great way to learn, great way to limit your risk when you're first getting started. But again, I am biased because again, they pay me money. They're a sponsor of mine. So check them out. Here's the link. 100% true. Just look at the long-term chart. Yeah, I mean, again, you got to understand, like, I sound like a broken record sometimes, and I understand that. Like I do understand that. Yeah, thank you so much, guys. I appreciate hitting 114K. But again, to really understand markets here, like to really understand, like you get a lot of people that watch The Big Short and they just want to be the next Michael Burry, and so they ignore the realities of things. You know, I've had a lot of people here that told me the market was going to crash a year ago. You know, when the market was, I had a lot of people telling me the market was going to crash when it was right down here. Here's the Q. So here's the SPY. Right? I had a lot of people telling me the market was going to crash right here. And again, what happened is that over time, they kept saying it. They said, oh, they told me I didn't know what I was talking about, that I was somehow blind, that everybody that's smart, you know, knows how the market's was going to crash. They shame, they call names, they do all this different stuff, right? They've been saying the market's going to crash right here, you know. And again, what has the market done? The market has ripped up huge amounts over this period of time, big amounts. You know, Nvidia ran, like all these crazy stocks ran. And most of the time, I just never see them again. Like they'll shame, they'll call names, they'll insult, and then crickets, you know, moving forward. And so again, a lot of these big time YouTubers are telling you the same thing, which is like the market's going to imminently crash. You know why? It's because that gets more clicks. That gets more views. And more people tune in if they think the market's going to crash and they need to know something. A lot of people are biased politically. A lot of people are biased from the economy. There's just a lot of bias here. But when you zoom out, again, the reason I told people this back then, which is the same thing I'm saying now, was that when you zoom out in markets here, guys, the edge is very obvious. You know, if you put up the actual S&P 500, not the SPY is an ETF of it, but here's the S&P 500. Again, this is the natural state of the market. And so if you worry so much about this, guys, that you miss out on this, you know, that's a mistake in my opinion. You know, to understand, if you're holding something, a lot of people are just gonna have much better returns investing, and that's okay. You know, you don't have to do anything. Like, figure out what works for you and do it. But I guess what I see is like big banks putting out a lot of, for lack of a better word, propaganda about how the market's gonna crash. Then the market doesn't crash, and the market ends up ripping up huge percentages. And who you think missed out on it? Retail traders who think the market's gonna crash every year are the ones missing out on it. Who do you think's profiting from it? The banks. The banks are profiting from it, you know. And so be smart. Understand. The market might crash in between here. Maybe the market does crash. Again, it's certainly possible. But even if we do crash, it generally rebounds within a few years. And so unless you're retiring imminently, like within the next year or two, it's still probably a better move to just sit. You know, the reason people pay money managers is because if they did it themselves, they would end up playing with it. You know, like the compounding effect over time of investing can be profound, but you can't touch it. You got to leave it alone. You know, you can't, unless you're selling and unless you're adding to your account and compounding over time, you got to basically just leave it alone. And a lot of people don't have that discipline. Another one to watch today is Apple. You know, Apple almost back up to 180s right now, which is really interesting because, again, CPI data came in neutral to bad to neutral, and the market is actually looking okay. You know, the market's not looking bad. Where's Microsoft at right now? Nvidia is another tell of the market. So again, I'm going to watch Tesla and Nvidia here because these are just big stocks to watch and pay attention to. Look at the NASDAQ start to dip. Yeah, the dollar index is probably down, burner, because the dollar moves down as the market moves up. But yeah, dollar index is down relative to the CPI release because, again, the dollar index has an inverse correlation usually with markets, right? So the dollar index goes down, the market goes up, vice versa. Stocks are buyers and sellers. If the agreed upon price is popular with volume, price spikes up or down, you risk a little to make more and try not to lose money. Yeah, I mean, In real estate, they have a saying, market price is only what a buyer's willing to pay for it. So, hey, what's up, Tiny? Hope you're doing good. Right, exactly, Godfather. 100%, man. He said the banks want you to sell your shares. They want you to capitulate and let those Amazon shares go, just like they got everybody to sell their Apple shares and GE shares in the 90s. 100%. But again, a lot of people are being manipulated and they don't realize it. You know, and then they're kind of getting mad at the messenger when I'm telling them, hey, like the market doesn't have to crash. Again, I also blame like other big time YouTubers, man. I've seen some big time YouTubers, bro. And of course they don't like me. What a shock. But like, I've seen some big time YouTubers, every freaking big economic report, whether it's the FOMC meeting, Jerome Powell press conferences, CPI reports, whatever it is, right? NVIDIA earnings, every major economic report, it's fire and blood. It's doom and gloom. It's the market's gonna crash, you know. Warning, the market's gonna crash, guys. And like it never does. It just keeps on going up, and then they just kind of say it again for the next one to get more clicks and more clicks, and you know, viewers just eat it up, bro. They don't even realize. But I digress. I like the DXY. I see. I like the joke. Is the dollar moving up or down? Down. Yeah, all good, Tiny. Congrats. That's great. Data's already out, Daniel. It might be right here. Like I said, just a weatherman this. Like it might be right here. In this general area. Could be. Might not be. But also possible it is. What would John do? When does the news drop? Yeah, the news is out, bro. 8:30 Eastern time. We don't have any other economic data today, I don't think, right? No. We got crude oil inventories, which might be relevant for oil because Exxon has been pumping up. I'm in Exxon right now. I'm green on the day somehow. What am I green on? I'm green on Walgreens. And Apple and AMC and Ford and Coca-Cola. All right, guys, y'all ready? 23 minutes. I'm trading the pound USD right now. Hey, good luck, dude. Dollar index on the brink of what seems like some crazy extension in the FOMC is a pause. I think the dollar will tank and markets rally into the November FOMC. Just my 2 cents. Maybe. Again, if we look at the dollar index here, right? So here's the Dixie. What you got to understand is that no matter which way the dollar goes, people are going to act like the sky is falling. And I've said this 1,000 times, but it's important for people to understand, right? Here is a weekly chart of the dollar. You know, when you look at this, it's mostly stayed the same. You know, all the way back to 2000, right? This is the trend. And no matter what the dollar is doing, people sensationalize it because, again, sensationalizing gets clicks. All right. So, like, just to give you my own experience over the last few years, what you generally see is when the dollar index was rising here, you know, this is where you probably remember the craziness, Brandon. You said you were talking about my streams a year ago. When inflation was sky high, inflation was like 8%, gas was freaking $7 a gallon and all this crazy stuff, right? This was right here. This is when the dollar was just kind of increasing. And when this happened, everybody's saying, oh no, the dollar is rising. It's the end of the world. The dollar's ripping up. It's the end of the world. What are we going to do? The dollar is rising. Oh no, it's the end of the world. What are we going to do? And again, so they said the sky is falling as the dollar rose. Then the last year straight, basically, we've seen dips. So the last year straight, we've seen this in flat action. The dollar index has not been rising. And so again, what did they say right here? They said, oh, the dollar is crashing, guys. Watch out. The dollar is crashing. When you zoom, again, there's a common saying, and it goes, when in doubt, zoom out. And so if you want to look at what the market's actually doing, you got to just zoom out. I don't think the dollar is in some treacherous area right here. I mean, maybe, but it's doing what I would expect it to do today, which is stay mostly sideways with the market being sideways. John Madden, hey, the GOAT, rest in peace. Yeah, so a crash is considered a short-term drop of 20 to 20+% usually is what they consider a crash. And again, the other story that I always tell people, because this is important to understand the market as well, right? So if you look at the S&P, right, a lot of people acting like a crash is imminent. Again, if we look at a long-term chart of the S&P, right, here's the S&P. Here's a weekly chart. I don't know if you consider this a crash, but this was the 2020 craziness. You know, so like back here in 2020, we already had a pretty profound drop. You know, the S&P 500, or no, wait, this is the wrong one. I'm sorry, hold on. Make sure I'm getting this right. Yeah, sorry, I gotta zoom out more. I'm dumb. I should have put a weekly chart up. Okay, here we go. So again, a lot of people saying, oh no, it's the end of the world. But here's the 2020 craziness right here. So we already had a really profound drop in the S&P 500 from almost 5K, from 4,800 bucks all the way down to 3,500 bucks, right? So we already had that. Like that was less than 5 years ago. You know, this was 2 years ago that this happened. And so we already had a really big correction in 2020, and not in 2020. I think this was like at the end of 21. Yeah, so right at the end of 21, we already had a pretty big correction. And this is after the pandemic, after the craziness that happened there. And so really, we've kind of been on the comeback from that already. And so now it looks like a cup and handle pattern to me personally, where we already had what some would consider a crash or at least a correction, you know, less than 3 years ago. And so maybe we crash again. Like maybe we do something like this. I don't know. But in order for the market, like a lot of the time you see during the big red days, everybody tries to kind of sensationalize the market. In order to, like, every dip you get like this, where we had this little pullback here, people are like, oh no, you had this little pullback here. People are like, oh no, it's the end of the world. But in order for it to really be a crash, like you hear crash a lot, in order for it to really be a crash, it would have to look like this, you know? And so we just haven't been anywhere close to that lately. The biggest drops we've had in the last couple months were right here, where we had 3 weeks of red. But even 3 weeks of red is just a little bitty blip relative to what would genuinely be considered a crash. And this would have, in order for it to be considered a crash, it would have to happen in a very short amount of time, like a week or two. So again, I'm not saying it's not going to happen, but just to understand like the actual levels of the market and what it means. Aside from that, the market's mostly been pushing up for the last year or so. Put up, and again, watch NVIDIA today. NVIDIA just such a heavily weighted stock that has such an influence over the market and has been really volatile lately too, with kind of corrections from the big run it's made. And so if we do crash, it's going to be because of something like NVIDIA falling all the way back down to like 350s or something like that. NVIDIA is the number 4 weighted stock in both the NASDAQ and the S&P 500, I think. And so one of the arguments for a crash is if NVIDIA starts to give back all the gains it made, you know, say some bad publicity comes out for AI or whatever, and that causes NVIDIA to just dump really fast. That could cause some very quick drops in markets, very quick drops. They also understand, though, they also have safeguards in the S&P and the NASDAQ. And so like if the S&P, I think, drops, I can't remember the percentages, but if the S&P drops over a certain percentage on any given day, they halt trading for the rest of that day. So they slow it down. So it slows down the fear. Not saying crashes won't happen, but there are safeguards around it now. Still certainly possible. Don't get it twisted, but there are some safeguards. CPI was neutral to slightly higher than expected, Laney. Yeah, well, the next big IPO is the ARM IPO, Justin. The ARM IPO's had a lot of hype. It was supposed to debut on Friday, but for whatever reason, it's just not out yet. Yeah, all good, Tiny. No worries. Would you anticipate a rate hike during election? I thought things were sugar-coated. Yeah, they are to a certain extent. I don't think we're going to raise rates. Let me look at the CME watch tool. I haven't looked at it since I did. It came out higher. I still think it's almost certain that we're going to pause or skip. I told people before, even if we come in higher than expected, it's actually, I don't think we're going to pause or skip. And so here's the CME watch. So yeah, so it's even more polarized than the, so before this was 93%. Now the probability of a pause or skip is 95%. So only 5% of people think we're going to raise rates next Wednesday during the rate hike decision. And so again, you could bet against a pause or a skip in the next cycle. Understand you're almost certainly wrong. Now, again, you have to understand they don't want a surprise. They don't want a shock. They don't want brash reactions. And so very, very rarely will the Fed ever shock people and say, hey, everybody's expecting a pause or skip, but we're going to go ahead and raise rates. And if they do, again, it's very likely the market's going to fall from it. All right, guys. Again, next week we have the FOMC meeting. Tomorrow we have PPI as well, so it's going to be a busy few days. Wonder what he's going to say. Yeah, I mean, it's pretty likely that we're going to pause or skip during the next cycle. What matters more than that is what the Fed says, like what Jerome Powell says. You know, that's what's going to matter more than a lot of this stuff is what he says during the next cycle. And nobody knows. We'll have to wait and see, you know. Yeah, I'm not sure if you're just kind of an alt account trolling me, Dion, which kind of seems that way. Dion said, hey, bro, I heard that GameStop is financially a much better long-term investment than Apple, Nvidia, Tesla. How true is that? And it's not true at all. GameStop is, again, the problem with GameStop is simple. They're obsolete. Like, again, I play video games. The problem with GameStop is that in 10 years, nobody's going to buy physical copies. It's just not what's going to happen. The same thing that happened with VHS tapes and CDs and DVDs. You know, GameStop's no exception. If you think somehow they're going to be immune to that behavior because a small percentage of people prefer physical, you're wrong. You know, physical copies of video games are going to be seen like they're going to be seen as obsolete in probably less than 5 years. And so that's bad news for GameStop. GameStop's got to pivot their business model. They're certainly not making more. And again, number one, you got to be a troll. No offense. Yeah, I mean, if you're not trolling, again, that's the answer, which is that, again, please don't get mad at the messenger. I'm just being honest. Like, think about it. Do you genuinely think they're already making consoles without CD drives, right? Do you really think in 5 years people are going to buy more or less physical copies? They're obviously going to buy less. You don't need physical copies anymore. People say, oh, I like owning things. That's great. But a small percentage of people are like that. It's not going to be enough to prop the business up. And so GameStop basically has console sales as their main thing that keeps them afloat. And, you know, consoles really only drop every 10 years, you know, every 5 to 10 years. So it's a tough road. I'm not saying they're going to fail, but GameStop's not even profitable as a company right now. They have a negative EPS. And so when you compare that to Apple or Tesla or Amazon, I mean, you know, you're comparing GameStop to the largest, most successful companies in the world. And so, yeah, I mean, yeah, I don't know what else to say really there. I asked because this dude on YouTube speaks about it with great conviction. It's mostly just confirmation bias. You know, like if you don't know what confirmation bias is, confirmation bias means that you're human. It's human nature to overestimate the likelihood of things that you want to happen, right? So if you invested your life savings in a GameStop and missed out on the crazy run they had in 2021, and now you're sitting on a big L, you know, your confirmation bias is going to overestimate the likelihood that it succeeds long term because it's what you want to happen.
right? But it doesn't mean it's going to actually happen. A lot of these guys on YouTube are just pandering to people to grow a following as well. Like, think about AMC. How many people have given all these crazy conspiracy theories about AMC? Like, people have put out, like, I've genuinely seen a new AMC conspiracy theory every month about how somehow it's going to do some crazy squeeze that nobody knows about. Again, they're just farming engagement from you all, right? Like, they know if you're in GameStop, you're going to want these things to happen. And so you're going to watch the video and believe it because that's what you want to happen, right? But they're just farming engagement is what it is. CPI is already out. What happens when a few of those companies go out of business and people lose thousands in games, music videos that they purchased? Hard copies may come back. It's not about the companies going out of business, you know. Again, that's not how it works. You know, like, to put it in perspective, a video game can be listed on the Microsoft Store even as the company behind it went out of business. You know, how many 80s video games did you know that video game companies went out of business, but you could still play a lot of these old 80s video games on a bunch of different devices, right? So that doesn't really mean much. It has more to do with the Microsoft Store overall, you know. Yeah, all good, Dion. Man, my nose has stopped up. I hope it's not acid reflux, dude. Maybe it's this coffee I'm drinking. I don't know. The market's kind of flat. CPI was flat, though. So CPI was pretty neutral. The CPI news is already out, guys. It's literally right below me right here. So again, CPI. US CPI year over year came in at 3.7%. And so CPI is already out, brother. It's been out. It came out at 8:30. Yeah, I don't know why. I mean, the market's flat because CPI was flat. It's neutral. Didn't really do much. Came in flat for most readings, except for 2 where it came in 0.1% higher. So even the ones that were high were pretty neutral. I don't know, Fu. I'm not sure what you should do, brother. Again, hard copies are a thing of the past. They really are, for sure. Again, you got to look at historical trends to understand it, right? Like, look at, again, I grew up when I was a kid, we had VHS tapes, right? VHS tapes went to the more efficient DVDs went to the more efficient streaming, and that's where video games are going to go. You know, they went from cassettes to CDs, you know, to streaming now and digital downloads. Download and storage capabilities got better. That's why people are downloading them now. Yeah, PPI up tomorrow, big. Q back up, SPY back up, Nvidia still down, but you can see the NASDAQ starting to fight its way back. But it's at 15.5K. See if it holds. Ugh. Yeah. No. I think people don't want to really see the truth sometimes because it's not convenient. Yeah, inflation data is out. Again, the market is mostly reacting slightly positive to it. We're slightly green relative to the release. Dollar index has fallen back down, which is what you want to see. Q is up. Again, you can see the SPY or the S&P right here. All right, guys. Yeah, but I mean, trading was never an ideological game. Don't move. You know, like again, if you talk to somebody said talk to GameStop employees, right? If you talk to most of them a couple of years ago, they would tell you that GameStop has a terrible corporate culture, who they give their employees, or a lot of times kids, these crazy unrealistic targets that if they don't hit, they get laid off or they get fired, and like everybody's kind of like fighting with each other corporately. There's a lot of like Camelot 331 or whatever his name is exposed a lot of that stuff with GameStop. So saying pump up GameStop as a way to combat toxic corporate culture is like saying pump up is like giving a bully $50,000 in order to stop bullying. You know what I mean? Like, it doesn't make sense. It's nonsensical. Trading should never be a moral thing. You know, if you make it a moral thing, you're going to get blinded. And again, the companies that make you feel the most warm and fuzzy are usually the ones that are falling down the most, right? So if you're part of a community, you know, and GameStop traders, and they're all patting each other on the back and they're saying, oh, what a great community we have here. Again, AMC traders, oh, you know, we're not leaving. We're such a great community of each other and traders who love and care about each other. Listen, Apple doesn't have to do that. Apple doesn't have to talk you into holding that way. You know, Apple's just going to go up. And so that talks traders into holding. And so again, if your company is making you feel all warm and fuzzy about the community behind it, it's probably because you're holding a depreciating asset and they're trying to talk you into not selling. And so again, you shouldn't like to be manipulated, so don't be. Again, I hope it goes up, but yeah, all good. Don't move. I was just using you as a point, so it's all good, brother. All right, guys. Hey, we got 2 minutes. 2 minutes. Yeah, don't bring morals up. All right, guys. All right, here we go. We got a minute left till the market opens. We'll see if we get something good. I'm ready. Hey, shout out to all the likes today. I appreciate the love. All right. And so again, we're down to 15.5K, 15.5K. Again, we'll see if we hold SPY up to 446s. See if we can day trade some more. Again, we're going to be day trading into the opening bell. Day trading into the opening bell. If you haven't already, check out Top Step, funded account program and futures. They give you a demo. They test your skill. If you can hit the target while following their rules, they fund you between 50K up to 150K with a 90% split. Great way to learn, test your skill. Most day traders lose money, so you can either put the money up yourself and almost certainly lose that in the beginning, or you can do Top Step, $49 a month, free funding coaches. You still have some pressure. If you're good enough to pass it, you can still get funded with a 90% split. But if you're not good enough to pass it, which is going to be most people, you're going to lose much less than you would usually than putting up the money up yourself. And again, if you're good enough, you can get funded. Best rules in the game. They are a sponsor of mine. I'm definitely biased, but if you want to check them out, here's the link. Again, great way to help support the channel here. We appreciate the love. CPI was slightly bad. It wasn't good. It was either neutral or slightly bad in terms of data. Came in slightly higher than expected for most. Neutral for the others. We're going to do another poll here. Does the Fed raise rates next Wednesday? All right, so here's the opening bell, guys. There's the opening bell. We got a slight pop at the opening bell. NVIDIA starting to push up. And again, watch NVIDIA. We're going to watch Tesla as well. But the NASDAQ moving up kind of looks like a triangle flag breakout pattern. All right, so look at this huge pop up at the opening bell. Again, this is why I try to tell people, man, like, I feel like a broken record, but again, every big CPI report, bro, every big CPI report, you got people telling people short, people telling people not to do anything, telling people you should sell now, short now, sell now. They're so pressuring the people about how the market's going to crash after a CPI report. And then the CPI data comes out, it ends up ripping up, and then crickets, silence. Like the same people that are pressuring everybody to sell are now quiet, you know, which is, again, I call it the Dunning-Kruger effect in trading, where the people who claim to know the most generally know the least. So be smart, guys. All right, market's popping up. NVIDIA testing that previous closing price at 448.70s. Yeah, I don't know if I trust this with either pawn, if I'm being completely real. Like, again, it could be baked in already. The market could have already reacted to this stuff. All right, team, we are sitting back waiting. I'm letting things settle a little bit. Ford ripping up. Look at Tesla fly up here. NVIDIA testing that previous top. Again, the NASDAQ up some. Let me switch this. Okay, so we made a nice little gain here. Tesla dipping down a little bit. My Express account. Dope. All right, so we are now green. All right. Bear with me, guys. Look at the market. NVIDIA is still trying to test these highs up here. All right, so we switched out of our... We're going to buy this dip. All right, so we got two contracts here. See if we pop real quick. Took half off there. Just locked in about, I think, about $200 in gains. Let me see. Something close to this. Or about 120. So we just scalped that $120 bounce in futures here. And again, we are day trading futures right now, guys. This is what we're day trading. This is the NASDAQ. It's basically the QQQ. is what this is. Nvidia just cracked over these high levels here, and again, this is why I watch Nvidia. Nvidia just popped over that level. Watching Tesla pretty closely here too. It's at 272s. Yeah, here's a little pop. Tesla starting to crack highs. Tesla just broke highs here as well. Bro, I've been in Honeywell for like months, and it's finally starting to go green on me on the day, man. I'm almost green on Honeywell. So again, we're finally green in our funded account. Again, what I'm doing with this funded account program is I'm slowly increasing. I'm taking small gains in my express funded account over time. All right, we're gonna take another scalp here, one contract. I'm not gonna add to this though. Very close to cutting it. I do like that move back up, but I'll consider adding to it now. There we go. Patience worked. All right, we're gonna go to cut that. All right, so again, the job is to build up a cushion. We now have a cushion of over $200. We got about a $210 cushion at the opening bell. Again, we're watching, what did we say we were watching, guys? Nvidia and Tesla. Look at Nvidia and Tesla's rise. This is definitely helping the market. Oracle, guys. Also, we're in Oracle right now. We bought that this morning. It's up. Apple is actually red. Oracle's, we bought Coca-Cola as well. Oracle. All right, we're too close to the highs here. Look at Nvidia ramp here, guys. So again, this is why, like I always tell people, Nvidia is one of the most watched stocks right now. Why is it one of the most watched stocks? Because it's heavily weighted and it puts in crazy big moves. And so watching Nvidia makes sense lately, I think, for sure. But again, maybe not. All right, again, Nvidia pulling back down under 450s here, so watch for a slight decrease. Tesla starting to rip up to 274s, testing highs. There, we got a nice little cushion on the day, but here's Nvidia falling down quick. I'm gonna buy this little small dip here. All right, we're flat. Trying to hold. Yeah, I'm gonna cut that. All right, so we just lost a little bit. Still up 150 on the day or so. Remember, the contract expires Friday, so you want to roll over if you're in futures if you haven't already. Nvidia is an important one to watch. I mean, it matters. Because crashes don't happen every day, Mitra. And again, a lot of young retail traders are talked into shorting blue chips instead of taking the big edge because people overpredict crashes, brother. You know, just because CPI comes in slightly bad doesn't mean the market's going to drop, and vice versa. And so, again, it's important to understand the real nuance of the market. And again, a lot of people are just misled into thinking that everybody wants to be Michael Burry and predict the next big short crash or whatever it is, but like very few people actually get that right. All right, so we just took another little E-mini trade just now, bought the dip. Here's our P&L. We're up 220 or so on the day, slightly. 4-to-1 win-loss ratio, though. Tesla is really helping the market today. Don't ask smart questions. Yeah, because asking why we didn't crash on neutral CPI data was super smart. Anyways, Nvidia going up to 451s right now. We'll see if it can break over that 450 level, psychological level. And it's all love here. I'm just kind of trolling you guys a little bit. Yeah, that's absolutely true, Nancy. Nancy says, however, it is important to note that you don't have a long edge in September. Absolutely. But again, I talked about this earlier. One of the things I've been saying this year, or this month, was that my bet was that we would actually have a green September because everybody's expecting a red September slump, you know, slow September crash. Everybody's expecting that. So my bet earlier this week was that we might actually have a green September. It might have been last week. I'll have to find it. If I'm right, I'll have to find it. But yeah, sometimes the market can be contrarian, in which it does the opposite of what people expect. Yeah, market's looking strong. Yeah, honestly, dude, I've just dealt with so many people that push a short crash, push a market crash, push a market crash. And then when they're wrong, they're just silent. They're just crickets, you know? Because, I mean, yeah, those were some fun times, dude. I had fun in 2021, bro. Again, 2021 is really what started my channel. Like prior to 2021, dude, I don't think I had ever had over 1K people here, like starting in 2021. You know, once we started streaming GameStop and AMC stuff, that's when my channel really started taking off. And we kind of haven't looked back. Like, you know, today we had over 3,000 people at 8:30. So, I mean, it's been fun, but. All right, there's a pretty big slump. I'm not going to buy this one either because I think there's a chance that we reverse back down here too. So I think there's a chance we do this. I might be wrong here, though. This is short-term prediction, so nobody freaking knows. But I think there's a chance that we test for a reversal, and I'm already pretty green on the day and everything, so I don't want to give that back. Hey, thank you, Nancy. Yeah, I say dumping because we have a pretty large pullback short term. It doesn't mean we're gonna go down again. I'm just kind of making random bets. I might be. It looks like I'm wrong about this one, but who knows? Hey, thank you. Yeah, it could be a stop out flush. I don't know. Again, I don't know how many people again, I cover every CPI report and I have for years. And so a lot of these, a lot of guys are just now starting to cover it, but you can tell when you first start covering them, you kind of sensationalize it a lot, right? Because you're not used to it. And so you think that you think the market has to respond sensically, to the data. And of course, it doesn't. Um, and so same thing with earnings, right? You get a company that has great earnings, great EPS, great sales, great guidance, and still drops. And so market can be nonsensical sometimes. And then it's a lot of the time it's not actually nonsensical. A lot of the time what it actually is that the algorithms, the hedge funds, the big banks, they've already front loaded into all this stuff because they got good data, right? They have good predictors and good data. And so they've already kind of front loaded into a lot of these reactions. And so it might look like the market's responding nonsensically, but it's actually just profit taking from correctly predicted moves, if that makes sense. I mean, the trend looks good on the upside. Again, I don't trust it, so I'm kind of waiting because I'll ride a trend for a specific amount of time and then I'll stop. I'm not going to keep pushing the trend because eventually we're going to usually at least pull back some. Very rarely do we stay in a trend all day. So Nvidia is still ramping up. Again, Nvidia is kind of what's propping the market up right now for sure. Again, y'all hit that subscribe button, hit the notification bell. I appreciate it. If you haven't already subscribed, definitely appreciate the love. All right, so sideways action really lately. Sideways action so far. I like that little downward candle on a 5-minute chart. So this kind of doesn't look too bad. Yeah, I mean, again, if you haven't checked out Chart Prime, another one of my sponsors is a company called Chart Prime. Look at Nvidia break highs here. So Nvidia break it over the highs at 454, the after hour, or the market open highs. So over the 454 level on Nvidia, testing 455, just broke 455 on Nvidia. This might drag the rest of the market up. Pushing towards 456 on Nvidia. Over 455 again, almost to 456, still pushing up. And again, this is dragging everything back up with it for the most part. So again, we'll see what happens pulling back now. And again, if you haven't checked out another one of my sponsors called Chart Prime, very useful, very useful. Again, this is a trading view indicator service you can use in stocks, crypto, Forex, futures. It'll show you like flag patterns. So like, look at this flag pattern. It'll give you buy and sell signals, strong buy, strong sell signals. And I can't guarantee you're going to make money. Nobody can. But again, I can't fake what I'm showing you. So this is a 5-minute chart on the NASDAQ. So that's exactly what I'm trading in stocks, right? Just, you can tally these up and look at how accurate this is. Sometimes look, strong buy signal here, nice bounce. Strong sell signal here, nice drops. Look at the buy signal showing up here. So 5, 10, 15, 20, 25, 30, 35, 40, 45, 50, like an hour of upward movement after that buy signal. Sell signal way back here. And look at the nice drops you get afterwards. Buy signal right here. Again, same thing, nice bounce. You can also see it'll give me alerts too. Like I can set it to give you alerts. And so again, you can kind of see the alerts show up on my screen right here. You can see the alerts right here on the bottom. And so it will give me alerts too. And you can use this in stocks, crypto, Forex, futures. It's just a small piece as well. Again, let me click out of these alerts. I can also use this on an hourly time frame too. So like here's a 1 hour time frame. So I can use it where every candlestick represents an hour. And just really useful. It's like 40 bucks a month. Look at the sell signal here, right? So look at the sell signal here, way back here. And then look at the drops for days. Literally, this happened days ago. It's still been in that downward trend from that sell signal here. Look at the strong buy signal way back here. Bounces for days. And again, I can't guarantee you're going to make money. Nobody can. And that's just a small piece. Look, I can also put up other ones. So if I take Market Oracle off and I put up the Market Oracle, the regular Market Oracle, it'll give me reversal signals, right? And this is an hourly trend. So I've never actually tried it. It's not, you'll have to back test different time frames, different symbols to see which, really works for you. But again, can be powerful. Again, my favorite thing is when you get multiple showing up together at once. So when you get like an engulfing candle and a reversal signal, look at the nice little bounce you get afterwards. Just the candlestick patterns can be powerful too. And I've never actually tried it. Look at it. Look at this. Literally predicted the bottom with exactly what I told you. Again, a reversal signal and a bullish engulfing candle showing up close to each other. Look at the bounce. This is hourly time frame too. Look at this one called the very bottom as well. And again, this is just a small piece. It's 40 bucks a month. You can use it on all these different symbols, securities, all this different stuff. Very useful, guys. Very useful. If you want to check it out, it's called Chart Prime. Again, Trading View Indicator Service. They are a sponsor of mine. They pay me money. And so I'm biased in their favor for sure. And I can't guarantee you're going to make money, but you can check them out right here. You can also see the link in the description. Sideways chart action right now. Sideways chart action. NVIDIA finally pulling back here. I haven't really been wanting to take anything yet. You can also use this banner right here, team, if you want to check it out. So here's the banner. Let me see right there. So you can use the banner right here if you want to check it out. And you can kind of click the link or whatever it is. We'll see if we get a bounce right here. Again, we got CPI data. Put that back up on screen so you can see it. Starting to slow. All right, so we are getting that pullback. Again, remember, I kind of told you guys I thought we might get this. Hey, good luck, Corey. Short Q. Hey, good luck, dude. All right, we got this little downwick pressure. I don't even know how I can check my P&L on Top Step Quant Tower. So on QT, you go to the top right of the top left symbol. You click the top left symbol on Quant Tower, and you go all the way down to informational and click account performance. Again, here's my funded account. We're up 130 on that. The other one, we are up about 220 or so on our combine account. Yeah, Apple has been fading down a little bit. That's been dragging the market down. When a lot of other stuff's been moving up. Tesla's starting to come back down too, though. All right, so we got a big dip. A little bit of a retracement back up. Stabilizing a little bit. Again, it kind of the upward pressure kind of shocked the market a little bit, and so you got a lot of shorts getting squeezed out of this movement. Let's see if NVIDIA holds. NVIDIA pulling back right to that volume weighted average price level. You can see how relevant this is. So like, look, here's the VWAP. NVIDIA dipping down close to that spot. Market's starting to flush. Consolidating. Yeah, I mean, the rest of the market's probably waiting for PPI data to come out tomorrow. You know, PPI data does drop tomorrow. All right, so yeah, guys, you can see we made a little bit just now on the E-mini. We bought that dip, anticipating that basically NVIDIA was going to hold that volume-weighted average price level. That was kind of the trade plan. You can see we brought attention to that a second ago, and we caught it. And again, you can kind of see what we're up. We are up about 430 or so on this account today, 430. NASDAQ still pushing up a little bit, mostly in that sideways trend. Originally, like I said, we thought we might break down a little bit, but we changed our mind once we saw NVIDIA kind of stabilizing at that VWAP level. So that was the plan. That's what we did now. And pretty green day overall. All right, so can't find any structure in any stocks right now because of the volatility. I'm looking at these headphones, man. I end up liking AirPods more. Starting to test the highs up there, though. Yeah. Can't find any structure to any stocks because of the volatility of prices. Yeah, it's mostly flat right now. So you get stuck in chop really easily on days like this. And so you can kind of see we're kind of just sideways here. If you draw like a trend, it's mostly like a rectangle. You know, it's not the best, easiest day to trade, I would say. See what crypto's doing. Do me a favor, subscribe, guys. Again, we're going to be covering CPI tomorrow or PPI tomorrow. So again, we got CPI today. Tomorrow is the other side of the inflationary coin. So every time you get CPI and then you get PPI. So CPI is the consumer price index. PPI is the producer price index. It is how much prices are going up or down for producers or sellers. And so today we had the consumer side. Tomorrow we have the producer side. And again, that's dropping tomorrow. We will stream it live. Again, we get thousands of people here because we cover this data quickly. Other people can say whatever they want. They can say they're better than me or whatever they want to say, but we cover the data fast. Like, we're really an economic release channel, and so we cover the data quickly. Tomorrow, that data is expected to show up at 0.4% on the month for PPI, 0.4% on the month. We also have core retail sales dropping tomorrow at 0.4% expectations. Jobless claims expected at 226,000. And retail sales expected at 0.2% as well. And so again, if you haven't already subscribed, hit the notification bell. We do stream every day. This is Quant Tower on Top Step, and Top Step is a funded account program in futures. They give you a demo. They test your skill. If you can hit the target while following their rules, they fund you between 50K up to 150K with a 90% split. Great way to learn day trading with less risk instead of putting up thousands and thousands of dollars and losing thousands and thousands of dollars like a lot of people do. You can put out $49 a month. And ultimately, if you're good enough to pass it, you can still get funded. If you're not good enough to pass it, then you're going to lose much less than you would putting up the money yourself. So genuinely useful. You can day trade the NASDAQ. This is the QQQ basically in futures. So this is basically the NASDAQ. And again, you can do this. And again, you can do this pretty regularly in futures. If you're good enough, you can day trade short, buy market, sell market, buy bid the ash, just like stocks. But again, there's no PDT in futures, and they do allow these funded account programs. So you can check them out. There's the link. They are a sponsor of mine. Great way to help support the channel. And hey, thank you so much, Mr. Scruff. I appreciate you, brother. Yeah, we might trade a little bit more. Let me see. Hey, thanks, Gordon. Which are more important for inflation, CPI or PPI? CPI is definitely more important. It's consumer inflation. Business inflation is relevant, but PPI is still important, but it's just less important than CPI. CPI is the most heavily watched one for sure. We are going to be doing a crypto show today. Bear with me while we get this scheduled up. Let me find this. There it is. Yeah, great play. I love Quant Tower. I used Trade-Evade originally, or I liked Trade-Evade a little bit more originally, but the reason we kind of switched to Quant Tower, well, it was originally it was contractually obligated, right? But but once even so now I'm not contractually obligated to use Quant Tower, and I still choose to use it because it's just better, in my opinion. I've always liked it better. It was just easier to use, easier to read, easier to transition from TOS to this. Let me make sure we got this rollover. So again, we're gonna pivot to a crypto show, guys. So again, you shouldn't have to go anywhere. It should immediately just transition you to the crypto stream, I think. And so let me see. It should immediately just transition to the crypto stream. Let me make sure. When we do switch over to the crypto channel, just make sure you sub. Hit that subscribe button. There's the market starting to flush back down. So the market's looking kind of weak right now. All right, still flushing. And CPI just dropped higher than expected. Bear with me, guys. I got to do one more thing. I'm kind of... All right, guys. So, yeah, we are going to go ahead and switch to our crypto show. And I'll see you guys over there. Again, you shouldn't have to go anywhere. As soon as we close this stream, it should immediately bring you to the crypto channel. So let me go ahead and get started. Market is kind of flushing like I originally thought it might, but I kind of changed my trading strategy afterwards. But yeah, we're going to be talking about crypto, all that good stuff. And so again, let me bring Cam over to this. All right, guys, crypto show is started. And again, if it doesn't bring you there for whatever reason, go to youtube.com/beginnercrypto. I'll see you guys over there.